All right, guys. Good morning. Good morning, online people. How are you doing? Can you hear me? Can you see me? All good? Hope you can see me, hear me. Good morning, all of you. Yes. So let's begin. Okay, I think it's all good. Yeah, come. Yes, all good. Okay. Come on, guys. Let's begin. Yeah, good to go. Let's see. So today we will be discussing a very, very important chapter, PGBP, Profit and Gains on Business or Profession. Extremely important from the examination point of view. So let us see. You can use whichever material you want, as I already told you. Of course, we'll be revising everything in PGBP, right? Okay. So let's start off with PGBP. So as far as section 28 is concerned, that is the charging section in PGBP. So we have something called as the profit and loss account, right? So in the P&L account, on the right hand side, credit side, you'll have the income, and on the left hand side, you have the expenses. Income, the charging section of income would be section number 28, right? And there are certain specialized income that is called deemed profit, that is given under section number 41. So right hand side you have income, that is section 28, and specialized income under section 41. On the other hand, left hand side, obviously we have your expenses. Expenses are given from section 30 to 37. So these are the expenses which we'll have to study, and of course the profit figure will be there, and that profit itself will be PGBP, profit and gains from business or profession. So tax will be charged at normal rates in some cases, and in some cases it will be charged at something called as presumptive rate. Presumptive rate. So presumptive rate is what? That is, the law presumes that this should be the rate, and then it will charge. So presumptive rate of taxation is given under various sections, 44 ADA, 44 AD, 44 BB, all those things we will see in due course of time. So one is normal rate, one is special rate of tax. So very, very simple. As I told you, this is itself is PGBP. First you have to go with what? Section 28, charging section. Then we have to go with specialized profit of 41. And then we'll have to go to expenses 30 to 37. And then we'll have to go to the profit part. So one by one. First of all, we have to see the charging section, section 28. 28 is profit and gains of business, income from PGBP. So first of all, what is income? To see the definition under 2 clause 24, income will be profits, gains and losses. I told you yesterday only, negative income is also deemed to be income. On the other hand, what do you mean by business or profession? Business or profession means what? So we have three things here. One is business, second one is profession, third one is vocation. So what do you mean by business? Business and profession both are mutually exclusive. So if you use the word business, you cannot use the word profession, and likewise. Similarly, you have something called as vocation. So as far as business is concerned, it is wide in meaning. The word business has a wide meaning. Business can be anything related to trade, commerce or manufacturing. Anything that you do will be business. There has to be some effort in this. There has to be some return. It can be organized sector or it can be unorganized sector also. So technically speaking, even a roadside hawker who is selling umbrellas, he is also doing business. During rainy season, he will sell umbrellas. During summer, he will sell buttermilk. That is also business. Isolated venture is also business. Even if you do for one day in a year is also business. Everything is called business. As simple as that. On the other hand, profession requires a certain skill set. It requires a certain skill set. What skill set? It can either be an intellectual skill set or it may include your labor skill set. Intellectual skill set will be your CA, CS, lawyer is a intellectual, whereas labor, you can be a, labor is what? Basically you have that intellect, but you also will need your skill. That is the way you are hand-eye coordination. That is Also surgeon, sportsman. So Virat Kohli will be practicing a profession of cricket. So yes, that is also his income will be charged under PGBP. Vocation, on the other hand, is your calling. Calling means what? It is your passion. So anything with relates to your passion, like photography. Photography is your calling, is your passion, is your hobby. Slowly that can become your profession also, because that can become a skill set. So basically vocation is included in the word profession. So anything that is your calling will be called as vocation as such. So what about let's say a priest who is out of passion, he is doing his priesthood either in a church or in a temple, all that, whatever money he is earning, definitely is doing it out of pure passion. You would have seen in this ISKCON temples, many engineers, all from IIM, IIT, people have quit everything and have become Gurujis now, right? Monks in this ISKCON temple. Now they'll be earning some money. Why? They are doing out of vocation, pure calling, pure passion. But of course, some of them have become famous. They have a lot of YouTube channels. They make a lot of money. Now that is now included in the word profession. So vocation is included in the word profession now. So everything that you earn, everything is business. Whatever you do is business. It can be an isolated venture or otherwise. Now, as discussed, any income will be business or profession. Any time that can be seasonal, that can be regular, that can be isolated, even one particular transaction can be business. And you have to receive some money. That receipt should be in cash. It can be in kind also. It can be in cash or it can be in kind. Kind means what? It can be valuation based on your valuation. If I receive during the course of business a watch, that is in kind. So will I have to pay tax on that? Definitely yes. So if there is a gift, a chartered accountant gets a gift from his client for the work done by him, then there is deemed to be called as there is a nexus. Nexus means business connection. So definitely he has to pay tax on the same. Reimbursement of expenses. Now you call me for a talk, let's say, that's my profession. I will go give a talk, no problem. But I will also charge you 2,000 rupees traveling conveyance reimbursement. So I will actually spend 3,000 rupees on my travel and I'll ask you for your travel reimbursement. You will pay me travel reimbursement. Is that PGBP? No. Reimbursement of expenses is not PGBP because it's just my expense I have actually spent and you are giving me money. That is not PGBP. Voluntary payment made by client. Of course, there is a nexus where there is a PGBP. That is, he will voluntarily give me a watch, voluntarily give me a land, car, jewelry, shares, or sometimes he will give me a trip, a foreign trip. He will give me tickets to a foreign trip, tickets somewhere. All this will be nexus, hence PGBP. The valuation will have to be done, and PGBP I have to, it is taxable under the head profit and gains of business or profession. That's what there is to it. Now moving on, this however, let us say there can be one question where my client was there and we developed a very good relationship over the years, professional relationship, personal relationship also. He sort of, thought of me more like a son, assume. When he dies, in his will, he has given me his land worth 1 crore. Now is that PGBP? No. Why? Because there is no nexus. For everything that I did professionally, he has already paid me money. But that gift was because of the personal relationship that we built. So will there be PGBP? No. But will IFOS come, income from other sources? Yes. Gift taxation will come. But if it's under a will, then different provisions will come. When we see IFOS, we'll see that. However, if an employee is getting salary, obviously it's not PGBP, it comes under income from salary. What if an employee is getting car, driver, gas connection, rent-free accommodation, 3 servants for his home and for his office? In all these things, PGBP will not come. What will come? This will be coming under perquisites. This will not come under PGBP. This will come under perquisites. So, in the perquisites chapter, yes, Ashutosh, you are right. It will come under perquisites. Very good. So, in a contract, I need to see whether it is a contract of service or contract for service. If it is a contract of service, it's employment. Contract for service, it is consultancy or profession. So contract for service, of service, both are different. If there is any isolated venture also, PGBP will definitely come. For example, in Nilgiris, there is a flower which called as Nil Kurinji. It blooms only once in 12 years. So once in 12 years when it blooms, if I organize a trip only to see the Neel Kurinji flower, and I'll make some superb money in that because it comes only once in 12 years. Is that PGBP? Yes. Many kinds of bamboo also lets out rice. It's like a rice, you can make delicacy out of it. It's called bamboo rice. It comes once in 20 years or something. Every bamboo once in 20 years it will shed out something rice, kind of a flaky thing, which people use it to make sweet, etc. That bamboo rice is very, very costly, and it comes only once in 20 years per bamboo, only few types of bamboos. Now tell me, that isolated venture, I am in the business of selling bamboo, but once in 20 years I will also make money by selling bamboo rice. Is that business? Of course it is. Definitely yes. So all these things would be business. Then there is something called as keyman insurance policy. So that is taken at with the life of a key managerial personnel. So anybody who is, the key persons in a company like MD, whole-time director, manager, CEO, CFO, etc. I will take keyman insurance. It is taken against the KMP. For whom? For his, in case something happens to his life, in case he commits a fraud, all that keyman insurance will be taken by company. Who will pay the premium for that? The company pays the premium for that. Company always pays the premium. Now, earlier what used to happen was, any premium paid by the company was allowed to be debited, to the company because it's an expense, no problem. But after a few years, if there is any surrender value, whether there is fraud, no fraud, whatever it is, money you will receive. If there is fraud, company will receive money. Who committed the fraud? KMP. The company has already taken protection. How? By taking keyman insurance policy. Are they paying a lot of premium every year? Yes, loads of premium they are paying. So if there is a fraud, insurance amount that you have received, was it taxed? Earlier there was a problem. Similarly, the key managerial personnel, he is receiving some money called surrender value at the end of the tenure. So will there be tax for him? Earlier it used to be exempt under 1010D. And if there is a fraud, insurance amount that you have received was not taxable earlier under section 28. All that did not even make sense, because when you are debiting the premium, you are giving a tax benefit by debiting the P&L account by reducing the tax burden. When you debit an expense, the profit will reduce. When the profit will reduce, tax also will reduce. So you have already given a benefit. When you are getting the money, obviously you should tax, but people were not taxing. So now the scenario is what? Very simple. Today, when I pay a premium by a company, definitely there is no change. Section 37(1) will come into the picture. Absolutely no change. But the section 1010D, this portion has been removed, and today, what is it? Tax is applicable. Means you will receive surrender value from a insurance company when there is no fraud, etc. But today you have got superb money. 1 crore you have received from the insurance company. Is it taxable? Yes. As an employee, it is taxable as salary. If you are receiving the money as a consultant, it is now taxable under section 28 PGBP. However, if you are receiving it as an honorary chairman, you are not working in the company full time, you are not working in the company at all, but because of your position and your past, they have given you a position of honorary chairman. So if you have got a position of honorary chairman, will you get PGBP, this thing? What do you say? Will it be taxed under PGBP? No, it will be taxed under IFOS. On the other hand, if the company receives the money, if there is any fraud, etc., that money is also taxable under 28(6), because now any keyman insurance policy amount received from company is also being made taxable. So these are again other modes of taxation. So we are discussing everything one by one. This is the other mode of taxation. Now income will obviously include all illegal income also. Definitely yes. So smuggling activity, then drugs, everything will be definitely part of the deal. If salary, commission, bonus, interest, etc. is received by a partner of a partnership firm, though there is no difference between partner and partnership firm in Indian partnership law, though you are giving salary to a partner, salary to a partner is allowed if it is allowed as per the partnership deed. So if the partnership deed allows salary, good for you, you will also get salary. But That salary will not be taxed in the hands of the partner as salary. Why? Because as a partner of a partnership firm, you will not get salary. Even though it is named as salary, it is for the risk that you are undertaking in the business. So for such people, what do you think? PGBP will come. So salary, commission, bonus, interest received by a partner of a partnership firm is taxable in the hands of the partner as PGBP. Salary, commission, bonus, interest received by member of an AOP, association of person, will not come here. So if they want to confuse you, they will simply say salary, commission, bonus, interest received by a member of an association of persons. It will be what? Not taxable under PGBP. It is taxed elsewhere, that we will see later, right? That's what it is. So share of any thing from a AOP BOI is exempt from taxation actually. But of course, not salary, commission, bonus, interest. We'll have to see that later. Then, non-compete fee. Non-compete fee. Non-compete fee. Yes. So, yeah, Ashutosh, you can say that partner is like the KMP. Yeah, then it's taxable. Yes, you can say that. No problem. Non-compete fee means what? That means that, let's say I am a chef in a 5-star hotel. I know all the secrets of that 5-star hotel, all the secret ingredients, everything I know. Today I am leaving that 5-star hotel. The 5-star hotel will make me sign a non-compete clause saying that please do not go and spill all the secrets everywhere else. And you cannot work in any other 5-star hotel for these many months, these many years. That initially only they would be having an agreement like that. They'll compensate me also properly. And they give me that compensation. Is that PGBP? Yes. Non-compete fee of a professional is definitely PGBP. That's what it is. Very, very simple. On the other hand, this is for what? Not competing elsewhere. So, one of my dad's friends had created a lubricant for petrol and diesel. If you add that lubricant, it will increase the efficiency of petrol of the vehicle also by almost 20%. So rather than getting mileage of, let's say, 15 kilometers per liter, you will get 17 to 18 kilometers per liter. He had created this. So Shell companies there, no? Shell, that is your Shell Corporation, your petrol, Shell Corporation, petroleum product. So they bought that and they told him, they gave him, let's say, 1 crore and told him, do not compete, do not use this anywhere else. So is that PGBP? Yes. On the other hand, if they split that payment, they said 10 lakhs is for non-compete, don't compete anywhere else. 90 lakhs, do not share your secret with anybody else. This is your secret formula which I have taken. Do not sell this secret product anywhere else. Is this also PGBP? Yes, because PGBP will involve 2 components. One, don't compete. Second one, don't share also. Don't share. So income received for not sharing intellectual property right. Not sharing intellectual property right is also PGBP. Is also PGBP. Then basically there is a contract where I have to sell SIM cards and other cards in whole of Karnataka. I have a deal with Airtel, let's say. All the small shops I only have to supply. Suddenly they will come to me and say, look, we have one more player now. You only handle South Karnataka. For North Karnataka, that other fellow will handle. But for South Karnataka, whatever you are doing, you continue. I will say, sir, you had given me whole of Karnataka. Now you are only giving South Karnataka. So you have modified the contract. Please pay me compensation. Because you have modified, I am losing so much business. So please pay me compensation. Then I will not do anything. No problem. Otherwise, I will sue you for breach of contract. They'll say, okay, fair enough. I have modified. I have terminated. So for that, what I will do? I will now give you some money. That money is also PGBP. Compensation received for termination or modification of a business contract. Yes. Then government will give you something called as duty drawback or cash compensatory support, like a subsidy. So any subsidy received, any refund of duty paid, it is to encourage exports. They will give you something called duty drawback. So whatever customs duty you pay, it will be refunded by the government. So if my cost was 1 lakh and 20,000 was customs duty, tomorrow 10,000 was customs duty, let's say, tomorrow they will refund back that 10,000 rupees. Is that PGBP? Yes. So what will I tell now? I will show my expenses as 1,10,000. Now minus again 10,000. Ultimately, I should show only 1 lakh. So that will be refund of duty paid will be credited to my P&L account. That also will be my PGBP. That is also PGBP. So all these are examples of PGBP just to make you understand. Let's say we have Shobha Developers, which has built a nice building. It has many homes in that building. Now for Shobha Developers, it is a stock in trade, as simple as that. What they do is, since it's in a very, very prominent location, they will decide that let me make 2 apartments, let me convert it to an office. And those 2 apartments, I will make it like permanent offices of Shobha Developers. If anybody wants any information about Shobha Developers, they can come to this building only. Apartment is also there. I can show them the apartment and 2 offices are also there. Then I can show them models of all the homes that I built across Bangalore, across India, whatever. Now, I will convert 2 offices into sales offices. Now, I am converting what? Stock in trade into capital asset. I am converting stock in trade into capital asset. Let us assume the stock in trade. I am converting it into what? Capital asset. Stock in trade was, let's say, the stock value was showing 1 crore, but the market value of the product of the entire house is 3 crore. Cost is what? Cost of when I bought it, cost of construction, all put together, it is 1 crore, those 2 homes put together. Now, unfortunately, the market value is 3 crore. Lawmaker says, when you are converting stock in trade into capital asset, right, your opening stock will be 1 crore. And now closing stock will be 0 because that portion you are removing. But they say the fair market value, you should take it as PGBP. So what will come on the credit side of P&L account? 3 crore. So ultimately, what is your actual profit then? 3 crore minus 1 crore only. 2 crore is the profit. That's not the point. Why 1 crore? Opening stock is there, no? And this is 3 crore is the FMB. So actual, what is your actual profit? 2 crore. But how much you should credit to P&L account? 3 crore. So the lawmaker has told, when the stock in trade is converted to capital asset, the day it is converted, you should write the what? Fair market value as on the date of conversion as PGBP. But is it the actual PGBP? No. 3 minus 1, 2 is the actual profit. But what should be credited to P&L account? 3 crore. And now you will take that 3 crore as what? As an asset. In where? In the balance sheet. It's a capital asset, no? So directly you will take it in the block of assets. How much you will take? 3 crore. You will take the FMB because you have already paid tax on that. Earlier it used to be only 1 crore. Now you have paid tax on 3 crore. So 2 crore you have already paid tax. So please take the full 3 crore as what? Asset. And on that depreciation is given every single year. That's what it is. Very, very simple. So these are all the various provisions of what? Profit and gains of business or profession. Now in computing my PGBP, this is about section 28. Till now we did section 28. Any doubt? Yes. Online people, anything? Come on, say yes, no. All of you, come on guys, online people. All good? Clear? Great. Super. Next. So moving on guys, this is section 28. Section 29, what it says? 29 says, while computing PGBP, you should follow 30 to 43B. That's what 29 says. While computing PGBP, follow 30 to 43B. Very, very simple. So first of all, we have to understand what that, and then also say that there was a doubt when there is an incorporation of a company which happens, let's say, in January 2023, right? Or rather the business, they want to start the company. Sometime in April 2023, the company gets actually incorporated. You get a certificate of incorporation as on April 2023. Any business that you do after April 2023, 9 crore I earned, that obviously will be PGBP. But the doubt was, what happens if I actually earn before also, before commencement of business or before rather incorporation, I already commenced business. Is it possible? See, as per company law, all that is not possible. But income tax doesn't care about all those things. They'll care how much money you earned, 1 crore. How much expenses you, incurred, 40 lakh. So the question is that 1 crore chargeable to tax? And second one, all the preliminary expenses of 40 lakh, is it allowed or not? General rule in Income Tax Act, all incomes are taxed, expenses are not allowed. How is it fair? That's what income tax is. After incorporation, you do whatever you want, then I agree, I'll give you expenses. But before incorporation, general rule, none of the expenses are allowed. So is the 40 lakh allowed? No. But lawmaker says, don't worry, don't cry, there are exceptions in law. There is a section called preliminary expenses. 35, which one? 35D. 35D preliminary expenses. I will only give you a certain set of preliminary expenses. All that expenses you add, and I will give you 1/5 every year. For how many years? I'll give you 5 years. Please take it, no problem. Other expenses, don't come and cry. Only few expenses I will give you. It's only few, not a lot, not all. Fair enough. So that is fine. That is absolutely agreed. Now what happened was, interestingly, expensively, what about this income? Is it charged? Income tax department said, of course I should charge this to my P&L account. But then company only is not there. Who will be the SSE? That was a big problem. SSE only, we don't know who it is. So as per Specific Relief Act, pre-incorporation contracts will be valid. Companies Act says it is invalid. But as per Specific Relief Act, pre-incorporation contracts are definitely valid if it is bona fide. If it is needed to start the company, that is for the purpose of incorporation of the company, and the shareholder should adopt the transactions once the company has started. Right? So now, what did the lawmaker say? That 40 lakhs we'll see. Once the company starts, preliminary expenses we'll see. But now, that part is separate. That is when the company begins. But what about that 1 crore? Assuming I'll give you 40 lakhs also expenses, which I'll allow you assume. 60 lakhs is your income. What will I do? I cannot tax it in the hands of the company because company is not born itself. So section 29 read with various cases say that 60 lakh is taxable in the hands of a promoter. It is taxable in the hands of a promoter. As what? As AOP, Association of Persons. Because company is not formed, lawmaker will make it into what? Association of Persons. Lawmaker will make it into Association of Persons. And will do what? Lawmaker will make it into AOP and he will tax. Very, very clear. Got it, guys? Simple. So, section 28, charging section. Section 29, computation. Now let us read, and all this we had seen, no problem. Whatever I've already explained, all these things. Now let us see section 30 to 37. These are all called admissible deductions. In that we have section number 30. Section number 30 is what? Expenses relating to building used for business or profession. You can be an owner of the building or you can be a tenant also. Let us assume you are the owner of the building. If you are the owner of the building, will you get deduction on rent? No. Will you pay rent to yourself? No. Not allowed. You will pay rates and taxes, municipal taxes, municipal rates, etc. Will that be allowed? Yes, of course it will be allowed. Will you get payment for insurance? Yes. Will you get deduction for all revenue repairs? Leakage will be happening, sanitary fixtures, etc. You have to add more fixtures, etc. Will you get revenue repairs? Yes. For capital repairs, will you get a deduction under PGBP in your profit and loss account? No. Why? Capital repairs will be added to the cost of the asset. It will be capitalized. So, when I say not deductible, it means not allowed to be debited to P&L account. Not debited to P&L account. It is not debited to P&L account. Very simple. Tenant, on the other hand. Tenant, he is paying rent on the building. Will he get deduction? Yes. That is the main reason or the main reasons why people take except, offices on rent is because of reduction of rent. They'll save taxes. If I am paying 1 lakh as rent, I am saving 30% tax. Because I'll debit it to P&L account, my income reduces by 1 lakh and I will save 30,000 rupees tax on it. So my effective rate is actually 70,000, actually speaking. Rates and taxes I am paying on behalf of the owner. Will it be allowed? Yes. Insurance deductible. Insurance deductible. Revenue repairs. Revenue repairs, that is also deductible. Revenue repairs is also deductible. All these are deductible. What are revenue repairs? Basically, one sink is not working because of wear and tear. I have taken it on rent. In my toilet, sink is not working properly. It's leaking. So yes, it's my problem because it's a wear and tear. It happens, no? Usually, yes. Revenue repairs deductible. Now, capital repairs is the interesting point. Capital repairs. Capital repairs now. I am adding one more building. I will go and ask the owner, sir, I'll add one more floor. Is it okay? Do you have permission? Yes, I have permission. But I don't have money. I cannot do it. You only do it. So the tenant will spend as if it's his own building. He will add one floor. Let us say he will spend 10 lakhs on adding the floor. The question before the income tax department and the courts were, will I take that 10 lakh directly to P&L account this year? Or can the tenant capitalize it? Imagine, that's not even his building. Can he capitalize it and claim depreciation on that 10 lakhs because he has used it as if it was his building? Many courts said directly you should debit it to P&L account. Many courts said no, you are not allowed to debit to P&L account because it's a capital expenditure, but you cannot capitalize because you are not the owner. Like that, many problems came. So lawmaker decided to change the law and create a concept called deemed building. What is deemed building? If any capital repairs are there by tenant where the SSE carries on the business or profession in a building not owned by him, any capital expenditure incurred by the SSE for the purpose of business or profession on construction of any structure, renovation or extension to the building, such capital expenditure will be treated as the building owned by the SSE and can definitely claim depreciation. Concept of deemed building was inserted in the law itself because a lot of cases were telling yes, no, like that. There are problematic situations anywhere, many places. Done. So that is what it is. That is section 30. What is section 31? 31 is for machinery, plant, furniture used for business. Section 30 is building used for business. 31 is machinery, plant, furniture used for business or profession. Here also, if I am owner, can he pay rent to himself? No, so not deductible. Owner is paying insurance for plant, furniture, machinery against damage for fire, etc. Whatever. Is it deductible? Yes. Revenue repairs is getting it done, deductible. Capital repairs definitely not deductible. Capital repairs not deductible. On the other hand, tenant is paying rent. Is it deductible on 37? Of course it is. That's why he is paying rent. Then tenant is paying insurance on behalf of the plant and machinery and everybody else. Yes, deductible. Revenue repairs deductible. Cap repairs not deductible. Guys, that earlier concept was deemed building, not deemed plant, deemed machinery. So here, if he has paid for a capital expense, for example, it happened actually in our library there. One day the water main motor, engine motor only went off. According to its capital or revenue? Capital. We told capital. Owner said revenue. Owner said I am not going to do. That is some 15,000 rupees. I am not going to do. Her logic also a little okay. She said you are only using the water. All your students are using. You only have to pay. I said, but madam, the motor as such, the main motor you have installed when you actually constructed it. Motor should always run, no? Water charges I will pay. Motor you should pay. Then she said, no, you should pay. Then I say, okay, leave it. We will pay, no problem. So now tell me guys, I have paid for the capital expenditure of motor 15,000. In my books, I will take it as P&L account. In the P&L account, will I take 15,000 capital expenditure? No. Can I take separate motor, water motor as an asset in my balance sheet? No. That is some money on which I will not get any tax benefits. Right? So it is not deductible. This actually happened. I'm telling you, this happened. Water motor. Now there is a problem whether it's capital or revenue. Still, always I can also justify. She can also justify. Anyway. So current repairs allowed. Capital repairs not allowed. Any cost, capital repair will not allowed. Now if I have to replace certain thing like that, for example, water motor, if I had to replace some components, then it is revenue. But if I replace the entire motor, means obviously it is capital. These are all the parameters laid out various court judgments. So there is a factory in which initially, let's say, coconut. In Mangalore, there is a factory called Bonda. Bonda means in Tulu language coconut, not Bonda. Bonda in Kannada is different. Bonda. So at Bonda now there is a full procedure. Bonda is, it will go through that entire factory. It will split. Then you will put it in the containers. They will process the entire tender coconut water, and then one bottle will come. Now in that conveyor belt, second conveyor belt itself gone. And that second machine is not working, which will rip open the coconut and put it into bottle. Now that portion I am replacing, revenue or capital? Capital. Why? Because the entire asset will work only if that part works, even though if it's a small part. It may be a very small part is missing there, that's all. But if I have to do that, it will actually stop working if I don't use that. So that's what they say. Sometimes replacement of a section in a series of machines interconnected can be regarded as repair. Without such replacement, it will not function as a whole. Correct? Yes. That's what it is. So if you see expenses relating to machinery, plant, furniture used for business or profession, what will you think? That is definitely deductible, not deductible, and all those things. So as I discussed, all revenue receipts, as a general rule, all revenue receipts are taxed unless exempt, and all capital expenditures are never, all revenue receipts I'm talking about. Here I'm talking about revenue expenses. All revenue repairs, revenue expenses are allowed as deduction. All capital expenses are generally never allowed as deduction except building, which is a deemed building concept. Similarly, all revenue receipts are taxed unless exempt. All capital receipts are not taxed unless separately taxed. For example, capital gain. Capital gain is a capital receipt. If I sell an asset, it's a capital gain. It is not a revenue receipt. So capital gains are taxed unless exempt. Whereas revenue receipts are taxed under PGBP, not under capital gains. Section 30 we have already seen. Next is very, very important, depreciation. Depreciation is given in section number 32. So in a single asset method, what happens? You see building, we have building A, building B, building C. Single asset method it is. Cost is 2 lakh, 2 lakh, 2 lakh, depreciation 20, 20, 20. What is the WDV? 1 lakh 80, 1 lakh 80, 1 lakh 80. Single asset method. Next year assume building A was sold. If building A was sold at two scenarios, building A whose WDV is 1 lakh 80 is either sold for 1 lakh 44 or sold for 1 lakh 96. If it is sold for 1 lakh 44,000, that is WDV worth 1 lakh 80 is sold for 1 lakh 44 in a single asset method. In building B and building C, it will be the same. 1 lakh 80 minus 18, 1 lakh 80 minus 18, 1 lakh 62, 1 lakh 62. Only in point number A there is a problem. In point number A, an asset worth 1 lakh 80 is sold for 1 lakh 44, which means there is a loss of 36,000. In a single asset method, this 36,000 loss I will never recover. So that entire that year it is allowed as terminal depreciation. On the other hand, in the second example, it was sold at 1,96,000. If it is sold at 1,96,000, 1,80,000 is the cost, 1,96,000 is the selling price. What is the profit? 16,000 rupees profit is credited to P&L account as balancing charge. This was the scenario till 1988. And even today, this is a scenario for single asset method, that is SLM basis, that is for power generation. For companies into power generation, they can either choose WDV or they can choose SLM. If they choose SLM, same concept. If the power generation unit is sold for a loss, the loss is treated fully in that year only as terminal depreciation. If the power generation unit is sold for a profit, that entire amount will be credited to P&L account as balancing charge. This is still relevant, that's why I did it. But this is not for all assets. It is only for power generation, that too those who have opted for SLM. Because power generation you can either opt for SLM or WDV. For all other assets, my dear friends, it is now WDV method. In that WDV also, a different concept called block of assets. So they have told all the assets of a particular class, which the income tax department only has decided which class, is now clubbed into one block. Means all plant one block, all machinery one block, all motor car one block, all intangibles one block, all buildings one block, all furniture one block, like that. So the moment you enter into a block, you will lose your individual significance. Gone. Individuality is gone. It's all part of the block. So one asset will be 1 lakh, second asset will be 10 lakh. Now both assets came. Now both assets value is 11 lakh. In that now you want to sell whatever you sell. You want to sell your asset worth 1 lakh for 50,000, asset worth 1 lakh for 40 lakh, your wish. I don't care. So one will come, what? Opening WDV will come. To that you should add what? Cost of assets acquired during the previous year. Minus sale or assets destroyed or scrap value or insurance compensation, etc. Whatever you get will be WDV at the end of the year. To that you should do depreciation as per the Income Tax Act. And that will be the opening WDV of the next year. So in my same example here, initially my asset was 2 lakh, 2 lakh, 2 lakh. If it were to be a block, all will come under which block? Will come under the building block. Will come under the block called buildings. How will this look now if I have to change that? As per example, initially when I started off nothing. During the year what I bought? 2 lakh, 2 lakh, 2 lakh, 6 lakh. At the end of the year nothing. So overall I have what? Overall I have 6 lakh rupees. Depreciation is at the rate of 10% for buildings. So 6 lakh minus 60,000 is 5 lakh 40,000. This is if I had a block. 5 lakh 40. Now same example I will take if there is a block of 5 lakh 40,000. First example, I will sell the asset at 1 lakh 44. Second one, I will sell the asset at 1 lakh 96. If I sell the asset as 1 lakh 44,000, what to do? Sell the asset at 1 lakh 96,000, what to do? If I sell the asset at 1 lakh 44,000, opening WDV 5 lakh 40, add actual cost of asset acquired nil minus how much is sold? 1 lakh 44 is sold. What is the WDV? 3 lakh 96,000. In the straight line method or in the single asset method, B and C were treated separately. 1 lakh 80, 1 lakh 80 it became. And asset A, there was a terminal depreciation of 36,000. Here nothing like that. All are added. 1 lakh 80, 1 lakh 80, 1 lakh 80 becomes 5 lakh 40. Sorry, 6 lakh minus 10% is 5 lakh 40. To that I will sell an asset 1 lakh 44. And the WDV will remain 3 lakh 96,000. In the old method, WDV was 3 lakh 60,000. What? 1 lakh 80 plus 1 lakh 80. Asset A is sold. Asset B was 1 lakh 80. Asset C was 1 lakh 80. Old method, WDV is coming 3 lakh 60. New method, it's coming 3 lakh 96,000. Why? Because the loss I am subtracting the sale. In the sale, I am subtracting 36,000 rupees less. So, a loss of 36,000 rupees has increased the WDV by 36,000 rupees. So, if there is a loss, it will increase the WDV. And since it has increased the WDV, you can claim depreciation on a higher amount. On the other hand, if I have sold it at a profit, 1,96,000. If I sold it at a profit, more will be subtracted or less will be subtracted? More. How much is subtracted? 16,000 rupees more is subtracted. 1,80,000 worth asset is sold for 1,96,000. So how much more is subtracted? 16,000. So 1,80,000 and 1,96,000 difference is 16,000. So the 16,000 rupees difference you will find it here. The 16,000 rupees difference you will find it here. So profit of 16,000 rupees in this case has reduced the WDV by 16,000. This is the beauty of the block method. This is the beauty of the block method. So coming back to depreciation, as far as block is concerned, this will be the block, class of assets. Tangible asset, intangible asset. Intangible asset you have building, furniture, plant and machinery. Intangible assets we have patents, know-how, copyright, license, franchises. All this is in the intangible area. And this, basically, this is how it will be. Tangible asset, furniture will be 10%. You have to remember the rates. Building, if it is used for residential purposes, etc., like guest houses, etc., Infosys has a guest house, then it is a different rate. What rate will that be for guest house, etc.? 5%. If it is normal office building where your office is situated, 10%. Plant and machinery, you have two blocks there. One is plant and machinery of 15%, one is 40%. And all intangibles are covered under 25% slab, 25%. So, even if I have to further break down, temporary structure building 40%. If I am constructing something, I will, Shobha Developers is constructing many things, and they are now having like some 10 small houses with just a tarpaulin for their workers to stay. They have spent 5 lakh rupees on constructing that tarpaulin houses with, they have their toilets, everything put together. Now for everything can they claim depreciation? Yes. How much they can claim? 40%. Why? Because it's a temporary structure. Building, I told you, residential purposes, etc. 5%, general building 10%. Furniture and fittings 10%. Machinery, if it's a motor car, normal motor vehicles 15%. Motor vehicles used for running them on hire, like if I own a taxi agency, I have 10 vehicles under me, I have given it for taxi hire, 30%. These two are irrelevant now, leave it. Ships 20, ship you have to remember 20. All other things, my dear friends, is 40, 40, 40, 40, everything you can think of except windmill. Windmill, that too if it is before, after it's 40 only, leave. After 1/4/2014 it's 40. Oil well is 15%. So basically oil well is 15%, ship is 20%, motor vehicle is 15%, motor vehicle plying is 30%, remaining is 40%. That is your aeroplane, aero engine, annual publication, computers, including computer software and all those things. Except all other normal machinery which is not covered here will be under 15% regime. One interesting change, computer including computer software. Income tax rules states computer software is also an asset which has to be debited to P&L account. Right? Computers including computer software. Income tax rules. But guys, Income Tax Act in the year 2021 changed the definition, or rather added one thing, that computer software is not an asset. Computer software, like for example today if I purchase computer software from this thing, what is that? Windows. Windows computer software I purchase, the operating system. I pay 25,000. Earlier, what people used to do, add it to the asset, claim depreciation, 25%, 40%. Now, no. Why it came and all, you come to final, I'll tell you. But in regular batch and DT Inter, I've already discussed anyway. So, in this computer software, now for marathon not needed, but computer software is now treated as royalty under section 9. So, this computer software is no longer an asset. Computer software will be an expense. So now tell me, if a company pays 23,000 and buys Windows original software, will they add it to the P&L account, debit to P&L account, or will they add it to the asset? Debit to P&L account. Debit to P&L account. Is it mandatory to keep all the rates of depreciation in mind? Yeah, it's actually easy. Nothing to keep in mind here. 5, 10, 40 and all, you know. Here, if it's motor vehicles, 15. Any motor vehicle, anything is 15. Only if it is used like a taxi, 30. Then your air, ship, plant, machinery, energy saving device, computer, everything is 40. And if they simply give you machinery in the exam, always take 15%. That's all. Very easy it is. Intangible, how much? 25% over. Very, very easy to remember. Which major areas are tested? Boss, all heads of income are undoubtedly. Right? So your basic status, all that will come for around 4-5 marks. PGBP will definitely come. TDS portion, 3-4 marks will come. Very important it is. People ignore that and go. PGBP will come. Capital gains will come, because capital gains in CA final will come less. So they will test all the important points in inter only. IFOS will come. Then of course the first problem will be what? Total income problem, which will have everything. Deductions under chapter 6A. For November 23, because of the changes in the law with respect to alternate, tax regime. So definitely you will get questions on the old regime. You will get questions on chapter 6A, which is normal deductions, all those things. So everything is important. Last 2-3 attempts, if you see DT paper, it is very tricky. They are asking tricky ones. So you need to be ready for anything. So if you have studied the right way, whatever they give, it will become very easy. So nothing to worry. Of course, MCQ is also there, which you can definitely solve. Know-how, patents, copyright, trademark, all those things, franchise or any other business or commercial rights of commercial nature, all this will be 25%. But guys, one more change came in 2021. Goodwill of business was removed. We'll discuss slightly later. Goodwill is no longer a intangible asset. It is no longer an intangible asset. So it will be removed from the intangible asset block. So computer includes computer accessories, peripheral, printer, scanner, server, UPS, everything. Electrical fittings include wiring, switches, socket, other fittings, everything will be my electrical fittings. Is this also building though? I have an entire area. One building comes here, one building comes here, one building. I will construct roads. Is that also building? Yes. I will construct one well, bore well. Is it building? Yes. Sir, how is that building? That is building. All part of building. Footpath, culvert for walking. Yes, building. Computer software means computer program, all that. That is fine. So I'll come to this here. Buildings will include roads, bridges, culverts, well, tube well, everything. So basically these are the blocks, guys. Depreciation is very important concept, right? So blocks, 3 blocks in building, 5% block, 10% block, 40% block in building only. 5 is for residential, 10 is for normal, 40 is for temporary structures. Plant and machinery, there are 5 blocks, 15, 20, 30, 40, 45. In that you 45 you leave, guys, it's fine. No longer that. 15, 20, 30, 40. 20 is for ships. Furniture fitting only one block. Everything comes under that 10%. Intangible only one block, 25%. So you should understand that the entire concept of assets will come together and it will be a block. Individual asset will lose its value. So it will be a block concept. In that some assets you can subtract, some assets you can add, no tension. That's what they say. Plant includes everything, ships, vehicles, books, scientific apparatus, etc. Does plant include, let us say, I am in the business of buying and selling animals. Animal is an asset or is it stock in trade? Stock in trade. So what will I take depreciation on it? No. What if I am in the business of timber and I'm a temple? Let's assume temple is running in the form of a company. I'm doing it as a business, or timber manufacture, timber cutting. I have bought an elephant. This elephant can easily break the timber. So I've trained an elephant and bought an elephant. All that people used to do, by the way. Now everything is banned. So now can I show that elephant as asset? I am a temple. Assume temple is a company. Temple is generally run as a trust. But temple now I am running it as a company. Yes, Ashutosh, is it a biological asset? Is it an asset? What? Is it a plant? All those questions came. It went to the court also. In circus I have assets. Circus used to be there before with animals. So animals were there. No, that's not stock. That is asset. It went to court. In one circus case only it went to court. Then what they did, amended the definition of plant. What did they say? Plant will exclude livestock. Do not include livestock. Today when an animal dies, what will I do? The cost of the animal minus whatever amount that I can make from the animal after it dies. The carcass, body I will sell, skin I will sell. Whatever is left, that amount will be allowed as reduction. So the animal cost me 10 lakhs, but I could recover 3 lakhs from the animal, 7 lakhs is reduction. So they made it very clear now what is it a plant as such? No. Otherwise, you are right. Of course, it is an asset. So it is not. So, yes, cost of the animal minus value recovered from the animal. Correct. Now, generally, I am a movie buff. In 1 week, minimum 3 movies I watch. My entire family has given up on me. So today they'll ask me which movie you are going. I only don't know where. But suddenly in the evening, I'll go up for a movie. Minimum 3, I'm not joking. In the theater only I watch. I always like to watch in luxury. True story. Now I am sitting in a recliner seat in PVR. Now when I want sitting there only, I think of tax only. When I'm sitting in PVR in a recliner seat, that seat, is it building, plant or machinery? Because it is motorized recliner seat. It can go up, down and all those things. What do you think? Is it plant? This also went to court. The recliner seats or the seats, is it furniture or is it plant? Because will it come under 10%? Will it come under 15%? Plant and machinery is it, or is it furniture? So it went to court. Or is it part of building actually? Building. Because for theater, what is the main thing? Chairs, screen. So if you see, theater building and hotel building, those specially equipped for business are still buildings and cannot be treated as plant for the purpose of claiming depreciation. So the entire theater building, since the main thing, including everything, is building only. Sorry? In that particular case, they said furniture is used for what? It is used for general, like it's an ancillary service, ancillary thing that you need. Little bit furniture here and there. But in a movie theater, the main thing is what? Screen and seat. You pay for the seat and luxury and of course the experience. Right? If the seat only is not good, nobody will come. Correct? But if the seat is not okay in a company is excellent, you'll still manage, no? On this chair, you'll throw one more chair, you'll take and sit. That's an ancillary part. But in a theater, the main thing is what? Screen and the seat only. You will pay for the seats, as simple as that. So in Chennai and all, Amma, Jayalalitha madam, she had told more than 200 rupees you cannot charge. That rule is still effective today. So in Chennai, the ticket rates are 63 rupees and all, you can watch a movie, guys. In Bangalore, you can't enter the room also for 63 rupees. Right? So that's why in Bangalore there are various luxurious theatres, because here you can charge money. That's how it is. And that is actually considered as the entire building, not furniture. Got it? Yes. So that is regarding all these things. Then the functional test. And of course, one more thing, like you are into pearl rearing, prawn rearing, anything they can ask you. You are rearing prawn, you are rearing fish, you are rearing crabs. So in an area, dedicated area, here extra high nutrients, here medium nutrients, here low nutrients. So crabs, prawn, etc. you will put those who are weak, you will put it in an area where there are high nutrients. Now the question is this, yes, pisciculture, correct. Is this land or is this building? Was the question. Or is this plant and machinery? This also went to court. Land, there is no depreciation. So the main thing in this only, I should buy that fertile land for pisciculture. I can't put fertilizers there. The soil only should be awesome. So I will buy land by paying crores. And income tax department said, land, no deduction, no depreciation. Went to court. So you see, functional test has to be applied to determine whether asset is a plant. Ponds are especially designed for rearing or breeding of prawns and have to be treated as tools of business and admissible on this, and depreciation is admissible. So the entire land here for pisciculture is treated as plant and machinery. So these questions they can test in MCQ. Definitely 2 marks, 1 mark, like that. That's why they can ask in MCQs. These are definitely important. Online people understood? Thumbs up, down, understood? Right. So that is what it is. So all these are the various areas, guys. Moving on. Of course, there are many other things. Great. So general rule of depreciation is you should be the owner of the building. That is, you are the beneficial owner of the building. Asset should be used for business or profession, as simple as that. So if I am a company which is into leasing, I should use that assets for business. What is my business? Leasing. So no problem. Team building. Exception is team building. In team building, if you are not the owner, you only have to, even though you are not the owner, you can claim depreciation. That is only an exception there. Now, next is, Mr. B buys a car and he leases it to Mr. A. Mr. A is the beneficial owner, right? And registration will take around 2 months. Until registration, whatever it happens, whatever it is, he is the beneficial owner. Ultimately, benefit goes to him only. Or there is a company where the registration directly happens in the names of, I am a leasing company. I have a lot of cars. I lease my car to you. I have leased my car to you. As per the Motor Vehicles Act, somebody has to register. So I will tell, I am the owner, I know. I am the owner, I have bought, I have all proof, I have only bought it. But registration, you take it in your name, it's okay. Now the question is, I am the lessor, you are the lessee. Who can claim depreciation? You are the registered owner as per Motor Vehicles Act. But I am the actual owner because I have bought it, I have all my papers. But registration is in your name. Because I will tell boss tomorrow if you go and bang your car somewhere, I will not come there. You only go because it's up to you. That's why registration you take in your name. But you are the registered owner. I am the beneficial owner. Ultimately, all the benefit of the car comes to me. Who will take depreciation? Issue went to court. Lessor only can take depreciation. Lessee cannot take depreciation under income tax law. In accounting standards and all, you can write whatever you want, but here it is different. In accounting standards, you have financial lease, operating lease. In some cases, the lessee only will take depreciation, nothing doing in income tax. Income tax law is very simple. Lessor alone can take depreciation. And depreciation is on active use of the asset, or ready to use or put to use. Ready to use or put to use? Put to use. Ready to use or put to use, it's always on put to use basis, not ready to use. As per accounting standards, depreciation can be charged based on ready to use. So if the asset is ready for you to use, definitely you can charge depreciation. But as per Income Tax Act, it is what? Put to use basis. It is based on put to use. Anyway, so that is absolutely clear. No changes there. On the other hand, there's a fire extinguisher there. I have never used it in my life. I don't know how to use also. Today when fire comes, I'll use it for the first time. Fire doesn't come only, there's no fire thankfully, and that asset is expired. I have paid 3,000 rupees for that fire extinguisher and I take it in my books of accounts. But it's not put to use. Yes, standby asset. Standby assets can be, depreciation can be taken on passive use. Passive use. Right? So, fire extinguisher, extra generator in factory, all these are passive, standby equipment. In a hire purchase, ownership is transferred only on the payment of the last installment, but depreciation can be claimed from the beginning only. These are all some exceptions. General rule, owner, and general rule, ready to put to use. But ready to use also exception. This also is an exception, hire purchase. So as I told you, there is building, furniture, plant and machinery, and intangible asset. Goodwill is not an intangible asset. They'll say Infosys has a temple, or any company has a temple, has a church, has a mosque in its premises. Can you claim depreciation on that? What do you think? Is it used for business? What did I tell you? You should be the owner. It should be put to use. Third one, used for business. First one, temple. Is it owned by the company? Yes. Is it put to use? Yeah, people go to the temple. Third one, is it used for the business or personal purpose? This issue also went to court. All these are court decisions. What do you think? Many companies you see, there are, TT tables, billiard tables, foosball tables for the employees to play. In Japan, there are sleeping pods where people can sleep off in the afternoon. It is mandatory in Japan to sleep. Imagine, awesome. 1 hour you have to sleep, mandatory. You have to sleep. 40 minutes is the time. 40 minutes you have to sleep in the afternoon after eating. That's the rule in Japan. There are sleeping pods. Right? So, yes, all these things are what? Definitely PGBP, because it is used for recreation purposes and it will increase the efficiency of the employee. It is used for business. Yes, at last cycle case. All these things. Supreme Court decision. Temple inside the premises or recreational spaces used for business are what? 100% depreciation. Method of depreciation, very simple. Generation and distribution of power. It can be SLM or WDV at the option of the SSE. Other cases, other SSEs, other cases, always WDV. Block concept came in 88-89. Assessment year. So we have seen all these things, motor vehicles, all that we have seen. Computer software is no longer there. Now, if you have utilized the asset for more than 180 days in the previous year, what is the rate? Full rate. If you have utilized the asset for less than 180 days, what is the rate? Half rate. So assets acquired during the year and put to use for 180 days or more, full rate. For less than 180 days, half rate. Not at all put to use, no depreciation. Not at all put to use, absolutely no depreciation. So, if you see here, this is the full structure of WDV as per 43.6. So what I'll do? First, WDV of the assets in the immediately preceding previous year, less depreciation actually allowed in the immediately preceding previous year, will give me WDV at the beginning of the year, opening WDV. To opening WDV, what I'll do? Actual cost of the asset acquired during the previous year. Put to use for more than 180 days, I will write down. Put to use for less than 180 days, I will write down. Acquired but not put to use, I will write down. Why? Because on that there is no depreciation. Then 180 days or more. Shutosh, I hope you answered your question. 180 days or more means exactly 180 days or more. Less monies payable. Monies payable means what? Monies receivable. That is sale value. In respect of any asset in the block which is sold, discarded, demolished, destroyed together with the scrap deletions during the year. So we have to figure out what do you mean by actual cost. That is my next discussion. And we need to figure out what do you mean by monies payable. Actual cost itself is a separate section, 43.1. Various explanations come there. And then I have monies payable. Then in capital gain, there is a concept called slump sale. In the entire, see, because block concept is always for SSC. Is it for SSC or for business? For SSC. I am an SSC, I have agarbatti business, I have sweet business, I have cracker business. I am a single SSC, I am having multiple businesses. It's not under separate companies. Same, one person handling 3 businesses. Now when I am doing my block, I should take the plant from agarbatti division, plant from sweet division and plant from cracker division and merge. That is the block concept. It is per SSC, it is not per business. Now tomorrow I am selling off my cracker division, telling nobody is anyway buying crackers, no point, it's all because of conservation and other things, nobody is buying, so I will sell it off. When I am selling it off, I have to pick the plants, furniture from each of these blocks and then sell it. As a block I will sell it. That is called slump sale. So when I am transferring it in slump sale, that also I have to subtract. WDV of asset transferred in slump sale. And then what I get finally is WDV for the purpose of depreciation. To that I subtract what? Depreciation as per the prescribed percentage this year actually allowed. And what will I get in the end? Closing value of the block. I will get the closing value of the block. Very, very simple. Closing value of the block. So in this, that put to use we have seen. Monies payable will be what? Any insurance, salvage, compensation. Monies payable in relation to such asset. Where asset is sold, price for which it is sold, everything I should subtract there. Monies payable means what? Monies payable to the actual SSC is what I need to see. Reduction of monies payable shall be only to the extent when the WDV becomes nil. So obviously here, if my total here comes up to let us say 10 lakh, but I have sold a couple of assets for 12 lakh, can I make it WDV minus 2 lakh? No. The final WDV should always be nil. Then what happens to that extra 2 lakhs? That will come under capital gain. That we'll see later. So if it is used after 4th October of the previous, this is for our November exam. In the question, if they have given anything, any asset used after 4th October, then it is half rate. Why? It is less than 180 days. If it is used on or before 4th October, then it is full rate. Why? More than 180 days. If it's a leap year, 1 day it will increase. That's all. But for a November exam, 4th October is what you need to think of. So I have bought one AC, but I have never put to use. I have dumped that AC somewhere. What do you think? Yes, obviously there will be no depreciation for sure. So for example, here plant and machinery, 15% depreciation at an opening WDV of 1000. New plant and machinery of 500 at 15% was purchased on 15th March 22, just 15 days before the close of the year. The new asset was used only for 16 days in the previous year. In this case, even though the asset was only used for 16 days, depreciation will be allowed at half rate. So opening block this, add purchases asset for more than 180 days nil, less than 180 days 500, not used at all nothing. Less sale of assets, WDV for calculating depreciation 1500. Depreciation, asset used for less than 180 days. How much? That is 500 into 7.5%. Balance 1000 at 15%. So overall is this. Then here, part of plant and machinery was sold for 500 on 1st March 2022. This asset is there in this only. Whatever was there 1000, it was actually used for 11 months. In this case, even though the asset was used for 11 months, depreciation benefit will not be available for that. Why? Depreciation will be available only on the balance. What is the balance? 1000 minus 500. So depreciation goes both ways. If a new asset is added, even if it's used for like 5 days in that entire year, half rate. On the other hand, 10 days before March 31st, you have already sold one asset which is used for the full year, no depreciation. Here, if the asset was purchased in July of the relevant previous year, but put to use only in December, it was bought more than 180 days, but put to use less than 180 days. Half rate. Why? Acquired and put to use is what I need to see. What if I bought it in 2021 July, but put to use in December 22? Next year. It was bought in previous year 21-22, put to use in 22-23, but in December 22, less than 180, more than 180? Less than 180. Should I give half rate or full rate? Full rate or half rate? Full rate. Why? Yes, the dialogue is acquired and put to use in that year. Acquired and put to use in that previous year. That's the Bayer Act language. Acquired and put to use in that previous year. It was acquired in the previous year, put to use in this previous year. Section will not apply. It is acquired and put to use in that previous year only. 50% will come. This is not 50%, full depreciation. Full depreciation will come. All this you've seen. Yeah. Before we move on to actual cost, before that we'll take a break. But before the break, we will finish this off, which is that additional depreciation. 32(1)(2)(a) speaks about additional depreciation. Additional depreciation is given for what? Manufacturing company or production of an article or a thing, or anything which is into power undertaking, or everything you will get additional depreciation. Basically all manufacturing companies will get. For what type of machinery? New plant and machinery. You will get it for new plant and machinery, which is acquired and put to use during the year. Business can be new or old, I don't care. The machinery must be new. So you will get extra 20% depreciation on actual cost. You can claim apart from 15% machinery, you will get 20% extra in that year where it is acquired and put to use. No additional depreciation for the following, even though it falls under plant and machinery: aircraft, ship, building, furniture, intangible asset. Building is not machinery. Building, furniture, intangible assets, no additional depreciation. Vehicles, though it is part of machinery, no additional depreciation. Plant and machinery, also no additional depreciation if it is second hand, if it is used in office premises, if it is used in residential premises, no depreciation. So this plant and machinery should be used where? Only in factory. No additional depreciation if you have already claimed 100% deduction before. For example, it is a scientific research asset brought into business. You have already claimed full 100%. Will you get additional depreciation? No. Normal depreciation only you will not get. What additional depreciation? So as far as vehicles are concerned, if they tell you forklift vehicle, the forklift vehicle will, lift all the items in the factory, or big cranes or JCBs used in the factory. Will you get additional depreciation on that? Yes. Why? Because it's used in the factory. So you should be careful what they are asking. So plant and machinery less than 180 days, additional depreciation also will be reduced from 20% to 10%. Can I claim the remaining 10% next year? Yes. So the new plant and machinery was purchased after 4th October. It is less than 180 days. So you will get additional depreciation 10%, and that normal depreciation 7.5%. Next year you can claim full depreciation 15%, and this extra unused additional depreciation 10%. WDV, only WDV method additional depreciation is allowed. If you are using SLM, additional depreciation not allowed. For example, for power generation unit, it's not allowed if they opt for SLM. Manufacture, it went to court. FM radio station said, I have spent 10 lakhs on producing a show. Star Plus example, they went and said, I have spent 40 lakhs in broadcasting a show. I have created this new show. You have to give depreciation. They said, is it manufacture? They wanted additional depreciation on all those things. Is it manufacture? If you see, yes. Printing and publishing, FM broadcast, telecast, etc. is treated as manufacturing business, and additional depreciation can be claimed. But if it's a new business in notified area of Bihar, Telangana, Andhra Pradesh, West Bengal, 20% is replaced by 35%. 20% is replaced by 35%. Got it, guys? Online people, all of you, are you alive? Dead? Yes. So these are all the pointers. Online peeps, done. Okay. So it's a good time to take a short break because we have finished considerable portions of depreciation. Next part is what? Actual cost. For actual cost, you need a little fresh mind. So take a 15-minute break. As you know, we are all starting sharp timings. It is 1:25 now. 1:40. 15 minutes break. 1:40 sharp. We will start. Okay. 1:40. Streaming will be on only, guys. I'll just put this thing. Break thing. 1:40. Let's meet 1:40. Okay, buddies, let's begin. Yes. So we were discussing the what do you say? Depreciation, additional depreciation, all that was done. Now let us go into another area, and this area is actual cost. Section 43(1). Actual cost. So what is the definition of actual cost? So here, before that, we had seen this actually allowed that we leave, then monies payable, actual cost. Monies payable we saw. Actual cost is what we need to see now. This is again very important. A lot of explanations are there in that. But before that, we will see the entire structure of actual cost. Whenever I say asset, what do you mean by the actual cost of the asset? So this is what we need to discuss, actual cost of the asset. So actual cost will be cost of purchase or construction of the asset, that is purchase price, less these amounts. These amounts you have to be subtracted, and some amounts have to be added. So what has to be subtracted? What has to be added? One by one. We will see now. So first and foremost, any cash payment that you make which is more than 10,000 rupees to a person in a day is not allowed, because this especially was there before also, but it has got more importance after demonetization. Any cash payment more than 10,000 rupees to a person in a day is not allowed. It can be two types of expenses. If it is a revenue expenditure, what to do? If it's a capital expenditure, what to do? If it is a revenue expenditure, for example, I went and bought some cakes, or I went and got some sweets. I paid 11,000 rupees cash to Sri Krishna Sweets. And for all the employees and all, for all the students and all that, in my P&L account, can I say paid to Krishna Sweets for sweets 11,000 in cash? No. Assessing officer will disallow, means he will add back. So if it's a revenue expenditure, in my example sweets, it is plus disallowed. Under which section? 40(a)(3). On the other hand, if it is capital expenditure is what? That is what we are discussing now. Actual cost. Because actual cost means capital expenditure. I spoke about sweets, that is revenue expenditure. If I am using 11,000 rupees, I am buying one asset. 20,000 rupees, I am buying an asset, but I paid cash for it. Whatever cash I paid will be subtracted from the actual cost. If the cost of the asset is 1 lakh, 40,000 I pay advance in cash, 60,000 I paid through bank. The lawmaker says 1 lakh is the total cost minus 40,000, not allowed. Why? I paid in cash. So subtracted from the actual cost of the asset, 43(1). So if the asset is purchased 10 lakh rupees, for example, 5 lakh I went through NEFT, IMPS, RTGS, 30,000 I paid through UPI, 1 lakh I paid through cross check. 10,000 rupees I paid every day for 20 days. Then one day I paid 5,000 rupees 20 times. And 70,000 rupees I paid via the Bheem app. So what all will be taken into consideration? 5 lakh will be taken because NEFT, 30,000 UPI taken, Bheem payment taken. 10,000 rupees you cannot exceed 10,000. Exactly 10,000 if you pay, allowed. For 20 days I pay 2 lakh, allowed, no problem. Guys, they say it should be account payee check or account payee bank draft or bank transfer or UPI, all those things. Cross check is not an account payee check. So coming back to law, your Negotiable Instruments Act, a check can be crossed generally like these two transfers lines, or it can be, you can write it account payee check. If it is a simple cross check, it will go into the account of the other person, but that can be negotiated further. I will give it to your account, you will transfer to somebody, that somebody to somebody, that somebody to somebody, and the final fellow can take cash out and give it to me. But if it's an account payee check, it cannot be negotiated further. That's why lawmaker only says account payee check, not any other check. So if it is a cross check as per 40A3 and 43(1), that is your capital expenditure, this is deemed to be cash. 1 lakh is deemed to be cash. So 1 lakh will be subtracted from actual cost. So 10 lakh minus 1 lakh minus 1 lakh again. Why this 1 lakh? 50,000, 5,000 rupees you are paying 20 times to the same person in a day. So 1 lakh will be disallowed. Disallowed means you are subtracted from the actual cost. So what will be my actual cost of the asset? 10 lakh minus 1 lakh minus 1 lakh. It will be 8 lakh rupees. I can take it into account. That is one part of the story. So if you see here in the actual cost, what I should add? Sorry, what should I subtract? With regard to acquisition of the asset for which payment in a day exceeds 10,000. Similarly, if I have purchased an asset for 1 lakh, 18,000 GST, total is 1 lakh 18,000. Cost of the asset is how much? 1 lakh 18,000. Should I take out the GST portion? Yes. Why? On GST portion I can claim credit. Right? Amount of excise or customs duty in respect of which input tax credit is allowed. But if I am buying a car for 1 lakh 18,000 rupees, assume, or if I am buying a bike, etc., for that credit is not allowed. So what will be my total cost? Actual cost, full 1 lakh 18 I can take. Company buys a car worth 20 lakh rupees and pays 18% GST, that is 3.6 lakhs. So they will buy it for 23.6 lakhs. Question to you is, should I take it as 23.6 or 20? 23.6. Why? For that GST portion, credit is not allowed as per GST Act. It's called block credit. You may know obviously because in GST it's there. It's called blocked credit. So for block credit, you will not get GST. So you can take the full 23 lakh 60,000. But if it is, credit is allowed, then it is only that portion, right? Yes. Then subsidies or grants, any subsidy, government has given you cash back. You bought an asset of 10 lakh, government gave you 50,000. So what should you subtract? 50,000. Second one, subsidies and grants. Fourth is the forex fluctuation. You will also add the forex fluctuation. You bought an asset from abroad, or you bought an asset using a loan, foreign exchange loan, or you bought an asset on credit basis. From abroad you imported. $1 lakh is the asset cost. And today the rate is 80 rupees. $1 is 80 rupees. No problem. You record it as 1 lakh into 80. 80 lakhs. Fair enough. Tomorrow, when you have to repay the amount, that time 80 has become 85 rupees. So don't you think so you have to pay more now? Yes. So what will you do? Add to the cost or subtract from the cost? Add to the cost. So forex fluctuation, increase in liability, will add to the cost. Tomorrow when you are repaying $20,000, the cost, the price from 85 rupees has come down to 78 rupees. So what will you do? 2 rupees you will subtract, that is decrease in the liability. So to actual cost, first thing I should subtract customs duty, GST, etc. if input tax credit is allowed. Secondly, subsidies and grants I will subtract. Third one, if it is more than 10,000 rupees, then I should subtract that portion if I pay it in cash. Fourth one, forex fluctuation, decrease in liability I should subtract. What should you add? Forex fluctuation, increase in liability I have to add. Increase in liability I have to add, decrease in liability I have to subtract. Very simple. Moving on, 3 other things are there. Here it's very simple. Expenses incurred for acquiring the asset. So when I am buying an asset, I have to pay the freight charges, insurance charges, loading, unloading, all this will be added to the cost of the asset because it is required for the asset to bring it to the current location. Then anything connection for the installation. in connection with the installation of the asset. So obviously I have to call the technician, I have to pay him the technician cost, I have to pay for the platform, erection cost, all these things. Yes, I'll have to add. No doubt about it. So there are few things. Come to that. First one. These are all explanations to actual cost which they can ask in the exam again and again. First part. Asset is acquired by way of gift or inheritance. Mr. Adam gifted an asset to Miss Eve on 17/7/21. The asset was purchased by Mr. Adam in July 2014 for 7 lakh. 7 years later, Adam gifted to Eve. What will be the cost to Miss Eve? Will it be original cost 7 lakh or will it be 7 lakh minus depreciation? 7 lakh minus depreciation, obviously. Actual cost to the previous owner minus depreciation actually allowed to the previous owner. So how much money she should take it into account? 7 lakh minus depreciation allowed to Mr. Adam. Now the question is, they'll ask in the exam, Mr. Adam had used it for his personal purposes. Adam had a car for personal purposes. BMW car he had bought 7 years ago for 1 crore. Today actual depreciated value is 20 lakhs. But then Adam was using it all for personal purposes. So today he gifted that to Miss Eve. Eve is bringing it into business. She will record at 1 crore or she will record at 25 lakh? 1 crore. Why? Because depreciation actually allowed to previous owner. If Adam was using it for personal purposes, will depreciation be allowed as per Income Tax Act? No. So what was the depreciation actually allowed? 0. What is the actual cost? 1 crore. So if Adam was using it for personal purposes, bring and gives it to Eve, and Eve brings it into business, what will be the actual cost? Cost to the previous owner. Because no depreciation was ever allowed to the previous owner. No depreciation was allowed to the previous owner. That's the reason why. Very, very simple. Stock in trade converted to a capital asset and then used for the purposes of business or profession. I already told you 1 crore Shobha property converted to office. And what is the FMB? 3 crore. 3 crore minus 1 crore. 2 crore will be PGBP. And how much will I record that asset as in my balance sheet? 3 crore. Why? Because I have already paid tax on 2 crore. So if you see same, actual cost will be FMB of such asset on the date of conversion. In my example, 3 crore. Third one. So there is one fellow, Mota Bhai and Chota Bhai. Chota Bhai has black money. Point number 1, Chota Bhai has black money. Mota Bhai needs black money. So scam they were doing. Chota Bhai had a asset of WDV 60 crore. 60 crore he had a WDV of asset. FMB was 80 crore. What did Chota Bhai do? He sold that asset worth 60 crore. FMB 80 crore. He sold it for 95 crore. To whom? Mota Bhai. Mota Bhai transferred 95 crore white money. 95 crore white money. Are you a fool to pay 15 crore more for a asset which is 80 crore? Will you pay 95 crore just like that? No. Why did he pay 15 crore extra black money, white money? Because he needed black money. So I transferred 95 crore to you via check and took back 15 crore from you black money. Double benefit. Chota Bhai had 15 crore black money. That black money is gone now for him. Good. Mota Bhai needed black money. He got black money. Second, Chota Bhai got the asset at 15 crore. He made a short-term capital gain, but he had other losses he could easily set off. Mota Bhai, an asset which is WDV 60 crore, he gets to record it at 95 crore and claim enhanced depreciation. Full cheating. What is the actual cost of this? He wrote it as 95 crore and started claiming depreciation. Since these rampant things were happening in India, they inserted an explanation. According to an explanation, if anything golmaal activities like this are happening, who will decide what the actual cost is? Assessing officer. In this case, the AO shall value and decide the actual cost. AO shall decide the actual cost. Why are you doing it? You are taking the money from one fellow at enhanced cost. For what? To claim enhanced depreciation. So obviously, you can definitely do the needful. So who will decide this? AO, assessing officer, shall value it based on actual cost. Assessing officer will value. Done. Second case, Mota Bhai had an asset for 5 lakh rupees. He sold it to Chota Bhai for 6 lakh rupees. Chota Bhai sold it to Tata Bhai 7 lakh. Tata to Bata 8 lakh. And Bata sold it to Sheila Aunty. How much? 9 lakh. Right? And then 9 lakh, Sheila Aunty sold it back to Mota Bhai. At what? 11 lakh rupees. 11 lakh rupees. Now the question is, Mota Bhai had an asset which was 5 lakh. Got it back at how much? 11 lakh rupees. Again, enhanced cost. What will be the actual cost here? Here you cannot go to the previous explanation because in the previous explanation, it was not your asset. Mota Bhai acquired from somebody else. Here it's a different explanation because your own asset you are reacquiring. You are reacquiring at 5 lakh or 11 lakh. The thing is, this went to court again. Courts, some people said 11, some people said 5, some people said 11 minus depreciation, some people said 5 minus depreciation. All these things are happening. So ultimately, what did the lawmaker say? They said original cost of the asset minus depreciation allowed, as if it is the only asset in the block. Means what? We should take that amount, whatever, and minus depreciation. So if you do the depreciation, whatever amount was it as on which day? As on the day you are taking it out. Or second one, whatever your price that you have paid for reacquisition, whichever is less. What is less now? 5 lakh or 11 lakh, whichever is less. What will you take? 5 lakh. So they said 5 lakh. That is the second part. 5 lakh. One more scam they were doing. These are all some explanation. One more scam. Mota Bhai Limited and there was one Factory Limited. Factory Limited had a pollution control equipment. Earlier, pollution control equipment depreciation rate was 100%. So 100% I took full depreciation. So an asset worth 2 crore, depreciation 2 crore. What is the WDV? Nil. Now what they did? They sold this asset for 2 crore to Mota Bhai. So when they sell that asset for 2 crore, whatever money they make, that is their short-term capital gain. They enjoy it because they had other losses, they set it off, no problem. Mota Bhai now, he has bought the asset for 2 crore. Now he leased it back to this factory because factory needs pollution control equipment, no? Leased it back to factory. I already told you who can claim depreciation? Lessor. So he started claiming depreciation on 2 crore Mota Bhai. So what happened was Mota Bhai bought it for 2 CR, started claiming depreciation on 2 CR. Factory Limited got capital gain 2 crore and set it off against other losses. Win-win situation for both. So Motaba is not even using that factory limited asset, but getting depreciation on 2 CR. So again, what was the explanation? Explanation said actual cost cannot be 2 crore. Actual cost shall be nil. Why nil? That will be the WDV of the asset sold by factory limited. So when you are buying the asset, what is the WDV that you should take it at? 0. Should take it as 0. Then this we have done all that. Building, if it was used for any other purpose, now you are bringing the building into business. You are using building for any other purpose. Now you are bringing it into business. You are using your building for personal purposes. Now you are bringing it into business. Actual cost will be cost of the building minus notional depreciation. For example, building 10 lakh on 14/2/2018. Actual cost if we brought into business on 14/4/2021 is cost of the building 10 lakh minus the notional depreciation. Whatever depreciation for all the years, and finally 6,92,550 is what you need to see. And guys, the depreciation rate, should I take 5%, 10%, 10%, 10%? When am I bringing it into business? In the year 21-22. And in the 21-22 also, it was, let's say, 10% only. For the year 21-22 also, it was 10%. When am I bringing it into business? In the year 21-22. Question is, should I calculate the depreciation as and when the same day happens, as in each year, or should I calculate at 10%? Was the question. Like every year, these are the rates of depreciation every year. Should I take it at that rate, or should I take it at the rate in force when the asset was brought into business? What was the rate? 10%. Should I take 10% everywhere, or should I take every year depreciation rates? That can be one MCQ question. Yes, the law uses the word rates as on that date. Which date? Date of bringing the asset into business. Kindly ignore previous rates. Online people, are you understanding? Yes, no? Come on, guys, reply. Done. So they can ask you an MCQ. Mr. A had purchased a machinery for 10 lakh rupees on 14/2/2018. He brought it into business in the year 2021. Rate of depreciation for the year 2021 was so and so. Year of bringing the asset into business was 10%. Rate as on that year of bringing into business was 10%. But other years, these were the rates. Randomly, they can give 17, 18, 8%, 18, 19, 12%, 19, 20, 15%, 20, 21, 10%. Year of bringing it into business, 10%. Now they will ask you what is the actual cost. What we should do? What is the amount? Then 10 lakh minus depreciation every year. What rate should I take? 10%. 100% wrong. This is only for building. See MCQ. They can ask you. Acha, dead easy paper. Come out of the exam, easy dead. Results come, 80 you expect, divided by 2, divided by 3. This whatever I discussed is only for building, this explanation. See the question, machinery. So what is the answer for this? There is no depreciation concept. Full take it at 10 lakhs. When will this explanation come? Only when there is building. So provision is only for building. Any other asset is brought into business, actual cost will be what? Original cost of acquisition. Simple. You should take any other thing. Any other asset, how much? Yes, original cost. Similarly, if they ask you, an asset was used outside India by somebody else and the SSE brought it into business, or you only brought into business. Let's say Firangi Limited 10 crore, the asset WDV as on 22 was 1 crore. Firangi Limited had purchased assets at 10 crore, the asset value now is 1 crore WDV. They brought it into business in Indian company and they recorded it at 10 crore. Allowed or not? No. Since it is coming from abroad, lawmaker has told it is actual cost will be purchase price 10 crore minus notional depreciation. Here they are using not the date, not the words rates in force as on that date. What they are saying? They are only saying rates in force. What do you mean by rates in force, guys? It means rate as per the Finance Act every year from the date of purchase and not the current rate. From the date of purchase till now, every year whatever rate you are doing, that you should see. Mind you, this is for any asset. This is not for building. Building is used for personal purposes, used into business in India. Any other asset from abroad to now, if you are bringing, what is the answer? It should be every year's rate, not the current rate at all. That's the difference between building one and foreign company one. That's the difference between building one and foreign company one. Both are different in various ways. Both are different in various ways. Cool. Then apart from that, if anything is used for scientific research and later brought into business, obviously actual cost will be nil. Why? Because in a scientific research I have used 100% depreciation already. A transferor company, 100% transfers to subsidiary company, which is a transferee company, which is an Indian company. That is Tesla transferring an asset for WDV 10 lakh rupees, original cost 40 lakh rupees to Tesla Bangalore. Or on the other hand, Hamleys UK is transferring an asset worth 10 lakh rupees, original cost 40 lakh rupees to Reliance Industries, whatever the case may be. Holding company transferring to 100% subsidiary, or foreign subsidiary like Hamleys transferring to 100% holding company Reliance. Original cost 40, WDV 10 lakh. Actual cost will be 10 lakh. Whatever the other company is recording, same you should also record. Same with amalgamation also, amalgamation etc. WDV of amalgamating company will be the actual cost of the amalgamated Indian company. For example, Veranda Learning absorbed JK Shah. Right? So what is, it's true story. Veranda Learning absorbed JK Shah. So what is the amalgamating company? JK Shah. What is the amalgamated company? Veranda Learning. So transferee company is the Indian company. Whatever WDV JK Shah recorded it at, same who should record? Veranda Learning. Similarly, Vodafone and Idea merged to become Vodafone Idea. What is the amalgamated company? Vodafone Idea. What is the amalgamating company? Vodafone. Whatever assets Vodafone was recording, that same asset value minus WDV, that same WDV we should record. Vodafone India. They're all simple provisions. Similarly, hiving off. Reliance Jio Infocom demerged into Reliance Jio Infocom, Jio Digital Fiber Private Limited, Reliance Jio Infratel Private Limited, all these things. So WDV of the demerged company, that is Jio Infocom is the demerged company. Whatever WDV, I am using it and splitting it. All these three companies also will record it at the same rate. Actual cost of resulting company. Actual cost of resulting company. So that was regarding depreciation and actual cost. Moving on, next we have sale of asset under section 50. For example, this example you take, opening WDV 6 lakh, actual cost 2 lakh, overall 8 lakh, sale has happened 8 lakh. What is the WDV of depreciation? Nil. Number of assets are 5. Here, let me take this one second. All this is okay. Before I come to that sale of assets, one second. Let me just finish our other areas. 2, 3 small areas are there. Proportionate depreciation. In case of succession of business, amalgamation, demerger, succession, aggregate amount of depreciation I will compute. And if the old company used it for 40 days, new company is using it for 320 days, how will I do it? It will be divided in the ratio of the number of days between the predecessor company and the successor company. Simple. And if the asset is used partly for business and partly for personal purposes, let's say I'm using a car, 50% I'm using it for business, 50% for personal purposes. So it is, you should take what depreciation? Half rate. Not half rate, full rate only, but then you should make it into the use based on the usage. In case there is any depreciation which cannot be absorbed, means your profit of the company before depreciation. Profit of the company before depreciation is, let us say, profit before depreciation is 50 crore. Depreciation only is coming up to 60 crore. So 50 minus 60, 10. I cannot absorb that extra 10 crore depreciation. That extra 10 crore depreciation which cannot be absorbed is called unabsorbed depreciation. Can it be carried forward? Yes. How many years? Indefinitely. No 8 years, 7 years, 5 years, indefinitely. What if the business gets discontinued later? I don't care. It is set off indefinitely, carried forward indefinitely. For power sector undertaking, I've already told you it is like a single asset method. If you use SLM, balancing charge, terminal depreciation, same, no change. Now coming to sale of asset concept. So in sale of assets, we should understand that WDV will come only if both the conditions are there. Even if I sell is what? Money is payable. When I do money is payable. When will WDV concept remain? At least there must be one asset in the block, and mind you, there should be some value left in the block. If there is value left but no asset, there is no concept of WDV. If value is left, no asset, yes. If assets are there but no value, then there is no concept of WDV. For WDV to exist, there has to be some value and at least one asset. So what happens if other things happen? We'll see here. There are 8 assets in an existing block which has an opening WDV of 8 lakh rupees. 2 more new assets were acquired during the year which had an actual cost of 3 lakh. So Opening WDV, no WIP. Opening WDV 8 lakh. 8 assets. 2 assets were added for 3 lakh. Total 10 assets at 11 lakh. All 10 assets were sold for 12 lakh. So all 10 were sold for 12 lakh. For WDV to exist, two conditions must be there. Assets must be existing and amount must be there. Here assets are also not there, amount is also not there. Hence, the difference here is a loss, 1 lakh. It is always what? Short-term capital gain or loss. In this example, full value of consideration is 12 lakh, cost of asset is 11 lakh. So 1 lakh will be short-term capital gain. Sorry, here I told loss, my bad. It is short-term capital gain. Why? Sale value is 12 lakhs. What is the cost? 1 lakh. So it is short-term capital gain. Short-term capital gain. Yes. Now you see 8 assets, 2 assets added, total 10 assets. All 10 assets were sold, but they are sold for 10 lakh. So 8 plus 3, 11, 11 minus 10. So I told you value must be there, asset must be there. Here value, asset is there, asset is not there, sorry, value is there. Still, can I have WDV? No. So this 1 lakh will be what? Loss, short-term capital loss. On the other hand, only 6 assets were sold, but they were sold for 12 lakh 50,000. Here assets are remaining, but value only is not there. Here also capital loss will, capital gain will be 1 lakh 50,000. Only in the final case, 10 assets out of which 6 are sold, 4 assets are remaining. Total 11 lakh of which 8 lakh is sold. So 3 lakh is remaining. Only when there is both assets and value. When assets and value both are there, only then it is what? WDV will exist. So simply put, in all cases, when assets are also not there, WDV is also not there, depreciation will not come, capital gain will come. When asset is not there but WDV is there, depreciation will not come, capital gain will come. When assets are there but WDV is not there, depreciation will not come, capital gain will come. When will capital gain not come and depreciation come? Both assets and WDV must be there. That is sale of asset. Next, so we are done with 32, 33, 34 and all is not there in your syllabus. 35, expenditure on scientific research. So we have completed 28, 29, 30, 31, 32. 32 is a bigger, like deadly section it is, depreciation. So much time we took. Now we are coming, these are all easy section. It will get over decently. So 35, scientific research. Now earlier it used to be one deadly section and I was doing CA final in 2012, 11, 12, 12 I wrote my exam. Horrible it was because for some cases 100% deduction, some cases 120% deduction, some cases 180%, some cases 200%. Now nothing, very easy. For all cases 100% deduction. So it can be split into 3 parts. One is you have your own in-house research. Second one is you are a specified type of company, manufacturing, biotech, etc. Third one is you are investing or pumping in money into other companies who are doing scientific research. You are not into scientific research, but you are giving money to companies who are doing scientific research. Three different things are there. So if you are doing it for your own stuff, this is in-house research, first one. Interesting to know that on land, there is absolutely no deduction. And for, that's what, it depends on two things. Research during the business, means after business has started, that research is one. One more is what? Research prior to 3 years of commencement of business. One is what? Research during business. One more is what? Research prior to 3 years of commencement of business. Just a sec. Online people, are you alive? Mic testing. Did you sleep off? Yes. Research during business. Research during business, you see. Revenue expenditure, 100% deduction. Revenue expenditure, 100% deduction. Means if I am using for payment of salary or, vehicle expenses, all these things, after business commenced, 100% will be allowed. Capital expenditure, if I buy land, no deduction. If I buy plant and machinery, etc., then what? 100% deduction. That is no tension. Land, no deduction. Others, 100% deduction. But now here you see, this land and others capital expenditure, same, no change. This is prior to 3 years of commencement of business, I am going to get anyway. So, land, no deduction. Others, 100% deduction. Others is 100% deduction. Same. Revenue only slightly different here. Revenue. Purchase of raw materials, 100% deduction. Salary to employees, 100% deduction. What about buying, fuel for vehicles? No deduction. Other revenue expenditure, no deduction. Other revenue expenditure, no deduction. So if I am using fuel, etc., no deduction. Any other problem, no deduction. Purchase of raw materials, 100% deduction. Salary to employees, 100% deduction. Others, no deduction. Right? And research during business, these two things, they are the same. Only here it will vary. This you need to keep in mind. Allowed as a deduction in the year of commencement. The revenue expenses, so basically at the time 3 years prior to commencement of business, you will not get any deduction for what? Other than purchase of raw materials and salary to employees. Whereas in revenue expenditure, you will get full 100% any type of revenue expenditure after doing the business. Anyway, now if you are into what? Now coming back to this, basically that's what we have already discussed. In-house research, same chart. Land not covered, all assessees. It applies to all assessees, 100% deduction. On the other hand, specified company 35 to AB. Specified company 35 to AB. This is for which companies, guys? those who are into manufacturing and those who are into biotech. Those who are into manufacturing, those who are into biotech. What will be covered? Only company will be covered. In the in-house research, all SSCs are covered. And in the other case, only company will be covered. Specified company 35 to AB. Land and building not covered. Here interesting to know, land and building not covered. %100 deduction. For everything else except land and building. All revenue expenditure allowed, all capital expenditure except land and building allowed. Pre-commencement expenses not allowed. Means what? Prior to commencement of business not allowed. Very simple. So in-house research, specified company. Third, contribution to others. Contribution to others, 100%. Means what? If I am contributing to any other company which is doing scientific research, everything is allowed. Here you cannot say capital or revenue. I am contributing to some other company. There is no capital revenue. Full everything is allowed. So, but you should see approval of, they should take the approval. Whoever I am donating to, let's say I am donating to Tata Research Center. The Tata Research Center should take the approval. When I am giving the donation, they would have taken the approval. But at the time of claiming the deduction at the end of the year, the approval is withdrawn by the government. So will I still get deduction? Yes. Deduction I should see at the time of approval only. At the time of giving donation only. So you see, approval of research association to be seen only at the time of contribution. Unabsorbed capital expenditure is equal to unabsorbed depreciation. Same. In case some of the capital expenditure remains unabsorbed, then what will I do? I will carry forward it indefinitely. I will carry forward indefinitely. It will change, it will go on indefinitely. Unabsorbed capital expenditure is equal to unabsorbed depreciation. Same route. What is unabsorbed capital expenditure? So I have invested in machinery. Can I take full deduction? Yes. Profit is 10 crore. Capital expenditure 20 crore. What is the unabsorbed capital expenditure? 10 crore. Can it be carried forward indefinitely? Yes. So this is regarding scientific research. Very, very simple. Everything is 100% only. And for in-house research, land is not covered. Specified company, land and building not covered. And contribution to others, 100%. Scientific research, motor vehicle. Scientific research which is motor vehicle. For example, if it is used for business later, or it is sold directly without using in any business. There can be two things. So I have used scientific research motor vehicle. It is a capital expenditure, 100% deduction already claimed. So after claiming it, using it for scientific research, I'll directly sell it off. That is one. Second one, I will bring it into my business and then sell it off. Tell me one thing, when I am bringing it into business, what will be my actual cost? Nil, we already seen. So I'll add it to the block of asset, WDV will be nil. After bringing it into my business, then I will sell it off. The moment it is added to my block, it will lose its individual value. So if at least one asset is present in the block and value exists in the block, then no capital gain, depreciation to continue on the block of assets. If all assets are sold along with scientific research asset, or value of block becomes nil, that is selling price is greater than WDV, then what? Capital gain. That's normal. Asset is added to the block, then it becomes block concept. But interesting part is, if it is sold directly without using in any business, then what will happen? Cost of the motor vehicle 20 lakh. Deduction allowed is also 20 lakh. 100% depreciation, deduction allowed. After used in the scientific, it is sold now, directly sold. Let's say it is sold for 15 lakh and it is sold for 25 lakh. 20 lakh asset is sold for 15 lakh. What will you do? You have already claimed full 20 lakh as debited to P&L account. Now you are getting 15 lakh to your P&L account. Full 15 lakh will be PGBP. On the other hand, you are selling it for 25 lakh. A 20 lakh asset, you are selling it for what? 25 lakh. In which 20 lakh is PGBP, 5 lakh will be capital gain. 5 lakh will be capital gain. One second. Done, guys. So this is regarding that. Online people all done? Cool. So that is regarding scientific research. That's all, guys. Next comes preliminary expenses. 35D. Preliminary expenses. This is very simple, guys. Preliminary expenses. I told you in the beginning only, under section 29, they had clearly told what will be not covered, taken into account. What will be not taken into account? That is your expenses which are done before incorporation will not be taken into account, that we have seen. Come to preliminary business, 1 second. Yeah. Amortization of certain preliminary expenses. Some preliminary expenses will not be taken into account. Some will be taken into account. Now these expenses, only these expenses will be covered. Other expenses will not be covered. Only these expenses will be taken into account. And how much deduction you will get? 1/5 every year. For how many years? 5 years. So one by one. Qualification for deduction under this section. Expenses before commencement of new business. Expenses before commencement of new business, everything will be allowed. Second, expenses after commencement of new business. One is expenses before commencement of new business. One is expenses after commencement of new business. That also you will get. Preliminary expenses is not just before, it is also after. But it is for extension of undertaking or setting up of a new unit. If ITC, they already have tobacco, they already have chocolates, Pebble chocolates, they already have fast moving consumer goods, they already have stationery, they already have hotels. They want to add one more now. Is it preliminary expense? Yes, because they are adding a new business, new undertaking. Setting up of a new unit. Or they want to extend an existing undertaking. So whatever they already have, they want to add much more. To FMCG existing, they want to add new products and they are building new things. They want to add, let's say, juice now. So they are going into aerated drinks, assume, in the FMCG only. They want to do ice creams. ITC ice creams they want to do. Yes, cigarette flavor. Right? So obviously, so all those things also to be added. Yes, you can take expenses. What all expenses you can take? Legal charges, feasibility report, registration fee paid for incorporation, all these basic expenses. Public issue of shares expenses, all that you can claim. How much you can claim is the interesting part. Company SSE, then others. For company SSE and others. Company SSE. How much, guys? 5% of the cost of the project or 5% of the capital employed, whichever is higher. 5% of the cost of the project or 5% of capital employed, whichever is higher. One more, or the actual preliminary expenses. So first I should take 5% of cost of project or 5% of capital employed, whichever is higher. Second one is preliminary expense. 1 or 2, whichever is less, I should take. 5% of the cost of the project or 5% of capital employed, whichever is higher, or preliminary expenses, whichever is less. 1 or 2, whichever is less. Other cases, preliminary expenses or 5% of project, whichever is less. So in the exam, you should figure out what is cost of project. You should know what is capital employed. And then the actual preliminary expenses. Deduction is allowed how much? 1/5. 5 installments from the year of commencement of business. Capital employed means aggregate of issued share capital, debentures and long-term borrowings as on the last date of the relevant previous years. Only these three things. Share capital, debentures, long-term borrowing. Will your share application money come? No. Cost of the project means what? Actual cost of the fixed assets which are shown in the books of accounts on the last day. It will include what? Land, building, leasehold, plant machinery, furniture, fittings, railway sidings, etc. Everything. And you should do the accounts of the company. That is mandatory. That has to be done. Very, very simple. So that is my preliminary expenditure. Next, 35 DDA. Expenses on VRS, voluntary retirement scheme. Any employee just before his retirement, 2-3 years before only, he can take voluntary retirement. For that he will get a payment. That payment you can take exemption for the employee either under 1010C or under 89(1). You can take relief. only one can be claimed. That is for the employee. But I am discussing 35 DDA for the company. Company will have to pay so much amount to whom? To the, what do you say, employee. Where can they claim? They can claim under 35 DDA, same 5 years amortization. So section 35D, 35 DDA same, 35D is for preliminary expense, 35 DDA is for VRS, voluntary retirement scheme. $35D done, 35 DDA done. Next most important thing is 35 AD, specified business. Specified business. So as far as incentive is concerned, there is one called investment linked incentive, one more is profit linked incentive. Your profit linked incentive is covered under ATIA, ATIB, ATIA, etc. purely CA final. Investment linked incentive is covered under 35 AD. So you have capital expenditure, then you have revenue expenditure. Revenue expenditure is not covered under 35 AD. Revenue expenditure is covered under section 30 to 37. Capital expenditure is covered in 35 AD. So guys, capital expenditure fully allowed under 35 AD, specified business. It will not include land, it will not include goodwill, it will not include financial instrument. Barring that, everything else is covered under specified business except land, goodwill, financial instrument, capital expenditure. But what exactly the specified business, we'll have to see. What are those specified businesses? We need to see that. So let's come to specified business. What are those specified businesses? You should remember these things. Yes. First one, cold chain facility. If you are setting up and operating a cold storage chain facility whereby you will store anybody who has given pulses, agricultural products, fish, all that, you will have a cold storage unit, then you will have to deduct, any capital expenditure that you have incurred on this, 100% deduction you will get. No need to capitalize. What will you do? Take it in P&L account directly. Next, warehousing facility for storage of agricultural produce. This is only to store agricultural produce, which is dry agricultural produce like rice, etc. That doesn't require cold storage. If you have fruits, you need cold storage. But normal wheat, pulses, no cold storage needed. Many cases went to the court where sugar was deemed not to be agricultural produce. Sugar cane is agricultural produce. Sugar is a byproduct. So many courts said if you are in the sugar industry, you will not get any, deduction at 35 AD. They went and cried. So after crying, one thing was inserted here, you see. Setting up and operating warehouse facility for sugar separately. That is also specified business. Hospital with 100 beds, housing project, fertilizer, all these things. Laying and operating a natural gas pipeline, crude oil, petroleum network, all these things. In my regular batch, specified business, what do you mean by this? Only 3-hour class happened. Now let's not go into that. It's a marathon, right? I'm just going to read out, that's all. But in the main class, I have explained that. Now you leave. Building and operating anywhere in India, hotel of 2-star or above category, 2-star hotel. Then housing project for slum redevelopment. All this, just remember the overall housing project, affordable housing, housing project, slum development, all that. Then your inland container and container freight station and production of beekeeping, honey and honeybee, all these things. Slurry pipeline, semiconductor wafer fabrication unit, that is nothing but your calculator will be chip there, that chip manufacturing unit, that one. And in this, infrastructure was not there at all. Adani, Ambani, etc. went to them and said, you have to insert infrastructure also. So very recently, 2 years ago, they have inserted infrastructure facility also. So all these Ambani, Adani, whatever they do, they can all claim under 35 AD. Mind you, 35 AD is a section where you can opt for it. Option. Any SSE can opt for it. It's optional. I have clearly given here. If you opt for this, will you get depreciation? No. If you want depreciation, you cannot opt for 35 AD. Simple as that. So if you see, specified business, it should be a new business. It should not be a split up business or reconstructed business, brand new business. And the asset which is brought must be new. It cannot be an asset which is transferred from non-specified business to specified business. Non-specified business to specified business. Asset must be new. Undoubtedly. Asset must be new. Guys, in additional depreciation we saw, asset must be new means what? Even if it is imported from outside India, it is considered old only. But here there is a change. In 35 AD, asset must be new, but there are two exceptions. Exception number 1. It should not have been used in India previously. They never say it should never have been used. They say it should not be used in India. Means if it is used abroad, no problem. Deemed to be new. This is the difference between 35 AD and additional depreciation. Second one, it should be imported from abroad as discussed. Third one, depreciation under Income Tax Act should never have been allowed before. Income Tax Act should never have been allowed before. Under Income Tax Act should never have been allowed before. Right? First one, it should not have been used in India previously. Second, imported from abroad. Third one, you should never have allowed depreciation before. Then only it is deemed to be new. Which means what? In India, it is new. Should not have been used in India, no depreciation allowed. In India, it is new. Exception number 2, old asset is transferred from non-specified business to specified business. It is still deemed to be new asset. It is still deemed to be new asset if value of the plant is less than or equal to 20% of the plant and machinery of the block of specified business. Means there is a already specified business asset of 100 crore. I am bringing in 15 crore worth of some old asset. Is it deemed to be new asset? Yes. So two exceptions are there. One exception, brand new asset used in India but already previously used abroad is deemed to be new. Second, even if you are converting from non-specified business to specified business also, no problem, provided the value of the plant must be less than or equal to 20% of the total plant and machinery. The total plant and machinery. Cash more than 10,000 to a person per day disallowed. Same. So when I am buying this asset, can I spend more than 10,000 rupees per day? No. To a person? No. No depreciation for 35 AD asset. Expenses which is before the commencement of business will be allowed in the year of commencement. When I am buying 35 AD asset, before commencement only if I buy, it will definitely be allowed on the day in the year of commencement. If I sell the asset after claiming deduction, same treatment as scientific research asset. Same thing we have done before, same, no change. So what about set off? PJ Hotels, specified business, had loss of 8 crore. Non-specified business, PJ classes, profit of 6 crore. Can I set off? No. Loss from specified business cannot be set off against profit of non-specified business. Right? PJ Hotels, specified business, 5 crore profit. PJ Beekeeping, loss 3 crore specified business. Can I set off? Yes. PJ Hotels, profit 4 crore, specified business. PJ Classes, non-specified business, loss of 2 crore. Can I set off? Yes, this is important. What is not allowed to be set off is what? Specified business loss cannot be set off against non-specified business income. But specified business profit can be set off against non-specified business loss. Loss from specified business can be set off only against profit of specified business is the dialogue that they have given. Nowhere they have told profit of specified business cannot be set off against loss of non-specified business. Nowhere they have told. Loss to be carried indefinitely. Loss to be carried indefinitely. Specified business asset to be used only for 8 years. If it is discarded before 8 years, whatever deduction you have claimed earlier will be PGBP minus depreciation. Why? Because, for example, you had bought for 10 crore, full 10 crore you debited to P&L account. In 5 years only you sell it off. You make some money. Full amount is taxable. But you will deduction allowed earlier, full 10 crore minus depreciation. So till today, whatever depreciation you have claimed, full amount will be taxed. If transferred after 8 years, then the actual cost will be nil. Actual cost will be nil. Right. So 10 more minutes break, and then the last part will be 36 and 37. Again, important areas, but you need some break. Of course, you've been sitting from that time. Take a short break. It's 2:52. 3:05 will start. 15 minutes. 3:05. Online people, 3:05 we are starting. Okay. I am not closing the stream. I shall just put this break screen. 3:05 will start. Last part, 36, 37, all those things. Right. Guys, moving on. Section 36. So we are done with other areas, 35 AD, 35 D, 35 DDA, all those things. So let us go into 36, 36, 37, and then we have your deemed profit 41 and presumptive taxation. All those things will finish off. One by one. 36, other deductions. Insurance premium, stock in trade, allowed. Health insurance premium for employees, it is allowed if paid other than cash. If you pay cash, not allowed. Other than cash, allowed. Bonus and commission to the employees, allowed. But if it will be allowed only if it is paid under 43B. 43B is what? It should be paid before the due date for filing the return. So if you pay within the due date 43B, then it is allowed. Otherwise, not allowed. Bonus and commission. So basically, you will make an expense, no, bonus expense account to bonus payable. Then you will do P&L account to bonus expense. That P&L account to bonus expense is allowed only if that bonus payable is paid to whom? To the authorities. I mean, bonus is to be paid to the employees. It will be paid when? It is on or before the due date of filing the return under 139. 139 return filing date under 139(1) is what? For normal individuals, July, and for companies and all, October. Next, as far as employer's contribution is concerned, employer's contribution to PF. There are two types of contribution. One is employer's contribution, one is employee's contribution. Employer's contribution to recognized funds like SPF, RPF, then your gratuity fund, superannuation fund, any approved superannuation fund is allowed subject to 43B. 43 capital B is the section which speaks about what? Allowing the expense only if it is paid before the due date. Then URPF, unrecognized provident fund. You have unrecognized provident fund, unrecognized gratuity fund, then unapproved superannuation fund, all these things. In this case, it will be disallowed. Employer's contribution to pension scheme under 80 CCD, this will be allowed to what extent? Actual contribution or 10% of salary, whichever is less. This is the limit that they have prescribed, subject to 43B. Subject to 43B. Animals used in business, as I told you, like a capital asset, not stock in trade. Deduction is allowed in which year? In which the animal dies or it becomes permanently useless. The reduction will be cost of the animal minus scrap value will be allowed as a reduction. This, as I told you, is where animals are used as not stock in trade but capital asset. I told you, temple will hire will buy a elephant, and any timber company will buy an elephant, circus elephant. All these are coming under this section. Now coming to bad debts. Bad debts are of two types. One is actual bad debts. Second one is provision for bad debts. Provision for bad debts are not at all allowed. Whereas actual bad debts, it can be bad debts due to sales or bad debts because of a loan. I gave you a loan. You, what do you say? Did not repay. Then, so a loan, if there is bad debts, it is not allowed because loan is never an expenditure. Loan is a, asset. Loan given is an asset. And then eventually what happens? It becomes a liability. I have to write it off. So that in that case, it is not at all allowed under PGBP. What about sales? Actual bad debts on sales. So there should be two conditions. First one, bad debt should have been written off in the books of accounts as irrecoverable. Means what? I should tell that I cannot recover it ever. Second, I need not prove that the debt is bad. I need not prove to anybody that the debt is bad. I can just have to write off in my accounts. That is what the lawmaker says. So basically, if you have written it off completely, then it is okay. Now question comes, I had made a sales of 1 lakh rupees in which 20,000 had become bad debts. So I had made sales at recognized income of 1 lakh, then bad debts I put P&L account debit how much? 20,000. So basically I have paid tax on exactly how much? 80,000 rupees. Tomorrow you will come and pay me back that 20,000 rupees. Or let's say you will pay me 15,000 rupees in that. 5,000 anyway gone. 15,000 you pay. What will be the treatment of that 15,000 rupees tomorrow? Yes, taxed in the year of receipt under 41(4). So bad debt recovery taxed in the year of receipt. And most important, one more condition is what? SSE must be the same. I don't care if business is discontinued, but SSE must be the same. So if SSE varies, let's say in my account, I had taken credit 1 lakh, debit 20,000, overall I paid tax on 80,000. And I sold my entire business to you. I am no longer in the picture. You receive that money 2 years later. Will it be taxed in your hands? No. That, my dear friends, is a capital receipt which is not at all taxable. So there were a couple of cases, PK, Kaimal and all those which we had seen in regular batch. Yes, in all these cases, it is a capital receipt, not taxable. That is the discussion on bad debts. Simple. Moving on, interest on loan. Interest on loan. Loan can be used for business. Loan can be for personal purposes also. I could have taken a loan. Interest on loan paid for, taken for personal use, not allowed. Interest on loan taken for business. If it is taken from scheduled bank, cooperative society, PFI, State Financial Corporation, SIDBI, Small Industry Development Bank of India, NBFC, then it is allowed only if it is paid. That's why subject to 43B. If they have taken a loan from money lender, whether it is paid or payable, both allowed, because 43B will not come. It is on payable basis. What is on paid basis? Scheduled bank, cooperative society, PFI, SFC and all those things. Personal use not allowed, business allowed, subject to 43B. Next is zero coupon bonds, ZCB. So if the issue price of ZCB is 100, redemption price is, issue price is 70, redemption price is 100. What is the discount allowed? 30. That 30 will be allowed on a pro rata basis. For how many months? The tenure of the ZCB. So 30 rupees discount, 30 into, let's say whatever ZCB you have given. You have given 1000 ZCBs. 30 into 1000, 30,000. 30,000 will be allowed for how long? 12 months. So 30,000 divided by 12. Every month I should take this basis. That's all, simple. If it's 18 months, 30,000 divided by 18. But then my financial year comes for 12 months. Hence 30,000 divided by 18 will be my monthly into 12. Into 12. Any STT or that is security transaction tax or commodity transaction tax will be allowed if the company is engaged in share or commodity trading business. Family planning expenditure is kind of useless now, but anyway, even if they ask theoretically, revenue expenditure 100% deduction, capital expenditure 5 equal annual installments. That is regarding all the expenses under 36. Then two things are there, 40 capital A and 40 small a. 40 capital A is what? 40A2 and 40A3. In that 40A3 already discussed, payment of expenses more than 10,000 rupees to a person in a day disallowed. 40A2 is excessive expenditure. If the company hires a, what do you say? Director is anyway there, relative of director also is hired as an accountant. Normal accountant will get 40,000 rupees per month. To this accountant who happens to be the relative of the director, I am paying him 1 lakh rupees. Assessing officer finds out, how is this fellow getting 1 lakh? He has done BCom from Vijaya College. 1 lakh is getting impossible. That too from Bangalore University BCom. Other fellows are getting 12,000. 13,000, 15,000, 20,000, 80,000 more you are paying this fellow. How? So 40A, 40 capital A, subsection 2, 40A2 will come. 40A2 covers relative as per Income Tax Act. Relative as per Companies Act is what? Spouse, brother, sister, father, mother, son and son's wife, daughter and daughter's husband as per Companies Act. But as per Income Tax Act, lineal ascendant, lineal descendant. So everybody is covered there. If you are giving any to any specified person, that is any relative or anybody who has substantial interest in the business. Substantial interest means 20% voting power. Whatever expenditure with the assessing officer finds excessive or unreasonable, what will he do? He will disallow. Unreasonable expenditure, he will completely disallow. So we have done in class in-depth version of who is that 40A2 and all that. So much depth in marathon not needed. Okay, because you just need to know what all the basic stuff. Then we see 40A3. 40A3 is what? Payment made to a single person in a day, other than account pay check, other than account pay bank draft, or other than ECS, NEFT, IMPS, etc. to a person single day more than 10,000. But there are certain exceptions. There is no 40A3. Even if you give an advance also, it is 40A3. For example, you make an entry advance to cash, 40,000, 40,000. You pay an advance in cash. Is it disallowed? No, because advance is not an expenditure. Tomorrow you will pass a journal entry, purchase account debtor to advance. So first entry is what? Advance to cash. Next entry what you will do? Purchase account debtor to advance. What have you essentially made? After advance gets cancelled. It is nothing but purchases to cash, hence disallowed. So all these other golmaal entries people were making, everything disallowed. No 40A3 if you are in the sense that 10,000 rupees will be increased to 35,000 rupees if and only if it is a goods carriage. Payment made to goods carriage for transport of goods. They can ask in an MCQ, the company paid 32,000 rupees. Up to 35,000, no problem. The company paid 32,000 rupees to its transport company, which were transporting passengers in cash. Disallowed, allowed? Disallowed. Why? It was passenger. Here what is covered? Goods. Payment made to government, RBI, any bank, etc. not there. Normal book entries not covered. Retirement benefits. If I pay some pension, etc., 50,000 in cash, I can pay. Payment to a place where banking facility is not available, okay. But if they ask one question, payment was made more than 10,000 on a day when bank was closed. This can also be MCQ question. Payment was made 12,000 rupees on a day when bank was closed. Allowed, disallowed? Disallowed. Earlier there used to be one line saying that if you are making a payment to somebody on a day when bank is closed, you can pay more than 10,000, no problem. But that was 10 years ago. Guys, now if bank is closed, who cares? We have Paytm, PhonePe, then Google Pay, some 1,000 things we have. WhatsApp payment has come. UPI. 100 UPIs you can open. Nobody will ask. There is no concept of, bank closing and all that. That has been amended. Payment made to primary producer. Primary producer means what? agricultural produce, forest, agriculture, apiculture, horticulture, fish products. So if I am directly paying to a farmer, can I pay more than 10,000? Yes, no problem. Similarly, fish will be a chief fisherman will be there. He will, under him, many other fishermen will be there. So the main fisherman will collect fish from everybody and then sell directly to some hotel. ITC hotel wants to buy fish. I'll sell it to the, ITC hotel. ITC hotel will give this fisherman 60,000 rupees cash. Allowed, disallowed? Allowed. Because head fisherman is deemed to be primary producer. Then one more case came. Similar to fish only, fellows were selling prawns, crabs, and other marine animals, amphibians, they were selling, fish, etc. Frog and all they were selling. Actually, now for them, can I pay more than 10,000? Yes, because fish and fish products include all aquatic animals. These are all some small points. Right. So that was regarding 40A2 and 40A3. So 36 done, 40A2, capital A2 done, 40 capital A3 done. Next what remains? 40 small a 1, 40 small a 1a, 37. Then my maintenance of accounts, tax audit, and presumptive taxation. That's it, over. 20 minutes, we'll finish off. Yes, 20-25 minutes. Yes, next. 37. 37 is what? General expenditure. This is where 30 to 36 will not be covered. Whatever we have discussed now, not covered. It should not be a capital expenditure. Should not be personal expenditure. It should be wholly and exclusively, therefore, profession or business. It should not be illegal. Should not be illegal. If anything is illegal, expenses is not allowed. There was a case, T.A. Qureshi. Morning he was selling paracetamol. Night he was selling joint family he was making, right? Morning he was selling paracetamol and all that. By evening, created a not Hindu undivided family, new joint family concept. Now the thing is what? He used to have 3-4 peddlers, drug peddlers, who used to give money and they used to go and do everything for him. Now they confiscated. Confiscate means what? Government took over the control and ownership of the drugs. They did a raid and they took drugs worth 1 crore. Confiscated. T.A. Qureshi said, okay, you take that, okay, but I will claim expenses of 20 lakhs which I paid to all the drug dealers, drug peddlers, cut and all I had to pay to everybody. 20-30 lakhs I will claim. Government said nothing doing. Because explanation to section 37 says any expenses towards earning any illegal income is not allowed. Then T.A. Qureshi said, okay, that 1 crore mal you have seized, not seized, confiscated. Seize means taken possession. Confiscation means taken ownership. That is a business loss for me, he told. It went up to the court. Court said, yes, you are right. Business loss, it can be claimed. So business loss can be claimed. Expenses cannot be claimed, mind you. So any business loss of 1 crore in this example can be set off against profits of illegal business. You can do that. Some other profit you would have made, set it off, no problem. So when they raided, they found out that he had made a profit of 2 crore in some other deal, illegal business. But they have confiscated already 1 crore. So T.A. Qureshi said, sir, I will set it off. Okay, 2 crore I had to pay tax, I didn't pay. 1 crore already you have. Take 1 crore, set off. AO didn't allow, went to court. Court said it's allowed because income includes illegal income. Only expenses is not allowed, loss is allowed. Then some of the examples, salary paid to employees, allowed. Salary paid to working part. If you see there is no separate section for salary, it will come under which section? 37, general section. Salary paid to working partner will be allowed. Salary paid to sleeping partner is not allowed. Lawmaker clearly says only to working partner. Salary paid to director allowed. Salary paid any other salary, everything allowed, subject to 43B. Advertisement expense. Advertisement expense. Yes, it is allowed, but advertisement in a political party, not allowed. Any penalty that you paid for breach of law, not allowed. Why? Obviously, you have committed a breach. It's like illegal in nature. But penalty for breach of contract, that is not illegal, but you didn't fulfill the contract, that's all. So that is allowed. Tax, direct tax not allowed. Interest on direct tax not allowed. Penalty not allowed, because you cannot claim tax as an expense. Tax is not an expense. It is on income you are paying something. Indirect taxes, definitely. Tax allowed, interest allowed, penalty not allowed. And tax and interest both subject to 43B on actual payment basis. Diwali expenses, festival bonus allowed. Any premium for keyman insurance policy allowed. Gift given to employees allowed. Telephone expenses, printing expenses, audit fee, everything allowed. Free sample, freebie, whenever you go some free samples and all they'll give, that is allowed. But, like for example, I am a new company, I've created a juice and I want to give samples to all the general public. Yeah, allowed. But what about doctors? For doctors, these pharma companies used to send their agents and tell that doctor to give my tablet only, my company's tablet. Doctor will say, what will you give me then? Sir, whatever you want. I want to go for a foreign trip. Okay, sir, take it. I want 10,000 rupees cash for this. Take it. That is not allowed. So, pharma company, in fact, Dolo had an allegation. They spent 1,000 crore during COVID. If you see during second wave, everybody used to take Dolo like chocolate. Every day 2, 2, 3, 3. Right? And how come everyone was taking Dolo? You see, 1,000 crore they have spent giving to all doctors, telling please prescribe Dolo. Dolo sales was almost some 3,000, 4,000 crore during that time. Expense they claimed 1,000 crore as business development. Assessing officer said add back, pay tax on that, not allowed. So freebie commission paid to doctors not allowed as per Indian Medical Council guidelines. Next part, CSR. CSR expenditure not allowed under 37. Why? Because CSR is a donation given. For donation, if you allow it as an expenditure, you will get 30% tax deduction. As per company law, you have to spend 2% of your average profit towards CSR. On that 30% tax benefit, if I give you, what's the point? It's like you have actually spent only 1.4%. So, not allowed. Not allowed. So, basically guys, CSR under 37(1) not allowed. Under 32, 36 also it will not come. But for CSR expenditure, can you take 80G deduction? Yes. Can you claim deduction under section 80G? Yes, you can. Except two things. Prime Minister's National Relief Fund, sorry, these two you can claim, sorry. Prime Minister's National Relief Fund you can claim. PM CARES Fund you can claim. Means you cannot claim under CSR, but you can claim under 80G. Prime Minister's National Relief Fund and PM CARES Fund, you cannot claim under CSR, but you can claim under 80G. But two other funds you need to remember the name, Clean Ganga Fund and the Swachh Bharat Kosh. Clean Ganga Fund and the Swachh Bharat Kosh is not allowed under 37. And not allowed under 80G also. if you compare CSR and ATG, these four funds will come into the picture. Prime Minister's National Relief Fund, PM CARES Fund. PM CARES Fund, Prime Minister National Relief Fund, not allowed under CSR, not allowed under 3236, but allowed under ATG. So will the company get a deduction? Yes. When will the company not get a deduction? If they go under, if they donate under Clean Ganga Fund and the Swachh Bharat Kosh. No CSR also, no ATG also. Online people, yes or no? Right. Next part, 40 small a. TDS, tax deducted at source. Tax deducted at source. What should you do with TDS? You should pay on time. If you don't pay on time, then it will be disallowed. How much is disallowed? We will see. Yes, Vijayendran. Solar plants in Chinnaswamy is CSR. We discussed all that in regular batch. So, TDS 40A1, 40A1A. 40A1, what all it covers? Interest, royalty, fee from technical services, and any amount on which TDS is payable. That is 40A1. Mind you, TDS on salary is not covered here. TDS on salary is covered on 40A2. 40A3, sorry, 40A3. TDS on salary to foreigners. So this covers what? Only to foreigners. So any payment outside India, payment made to foreign company, or payment made to NRI in India. What all is covered? Interest, royalty, fee from technical services, and any other amount on which TDS is payable. What is the component here? TDS deductible. Whatever TDS you have to deduct. Conditions of disallowance. Either you deduct but not deductible but not deducted, or it is deductible, deducted but not paid to the government before the due date of filing the return of income. In these cases, what will happen? 100% disallowance. So payment has to be made to a foreign company. You have to deduct TDS. You have not deducted. Or you have deducted, but best part is you only retained it, not remitted to government. What will the government do? That entire expense. Expense is 1 lakh. TDS is 10,000. 10,000 if you don't pay, government will disallow full 1 lakh. Is it permanent disallowance? No. Whenever you pay, before the due date you should pay. Due date is when? 31st October. You pay on, let's say, 1st January of next year. I will allow it next year. This year I will add back. Next year I will allow. This is 40A1. Same to same copy paste is 40A1A. But here it is not for resident, non-resident. Here it is for resident. And here it is not interest, technical fee and all. Here it is any payment. So any TDS component, I go and teach somewhere, they'll have to pay me 1 lakh rupees. They will not pay me they'll have to pay me 1 lakh minus 10,000 TDS. They have by mistake transferred full 1 lakh to me. So will it be, and they have not done anything before the due date. So will it be disallowed for them? Yes. How much will be disallowed? 30%. 30% will be disallowed. So as I told you, 1 lakh rupees, I will go and teach in an academy. Academy will pay me 1 lakh. In that 1 lakh, 10,000 they'll have to deduct and then pay me 90. They forget to do it. So will they be liable? Yes. They will be called as SSE in default. But lot of other penal provisions will come for them. So to avoid that, one additional provision is there. What is that additional provision? Lawmaker says, okay, go to PJ and tell him, by mistake I paid that 10,000 also to you. Have you taken the full 1 lakh in your tax return? You ask him. Yes, I have taken. Second, have you paid tax on that? on your own? Yes, I have paid. You should have deducted. Instead of that, I have only paid. No problem. Third, can you give me proof of tax? Can you give me the proof in the return? Okay. After all that, go and show it to a chartered accountant. Chartered accountant will certify. All these things, if you do, that academy which goofed up will not be called as SSE in default. Because SSE in default will have other prosecution, interest, penalty, etc. It may also lead to jail time later. To avoid that, what I can do? Go to PJ, request him, have you already included? Show me, give me the proof. And I'll take all the proof and I'll submit over. Then I'll not be called SSE in default. Because for the government, whether academy pays tax on behalf of PJ or PJ pays tax himself, for them money they are receiving. So for them, no tension. That is 40A1. And this is the thing for the same thing. For everything, it's the same. They are not SSE in default. On the other hand, 40A3, salary payable to non-resident outside India. Before the due date, if you don't pay, permanent disallowance, deadly. No mercy, permanent disallowance. It's going to be permanent disallowance. That's all. 40A1, 40A1A, 40A3. Then comes 43B. What is 43B? Expenses allowed only on payment basis. These are the expenses which will only be taken into account if you make the payment within due date of filing the return. What are those? Employees' contribution to recognized provident fund, statutory provident fund, bonus, commission, interest on loan, borrowing only from banks, I told you. Employee welfare, TDS, we just saw now, 40A1, 40A1A, GST, leave encashment, railway, to use the railway assets. Like if I hire a small shop in the railway, Indian Railways, to sell some stuff, that rent. If payment is made within the due date of filing the return, then allowed in the previous year. If it is after the due date, then allowed in the year in which it is actually paid. Interest payable on the loan, interest is allowed as a deduction in which the installment is paid. That is regarding that. Simple. 43B is a simple section. Next one is deemed profit under section 41(1). Deemed profit. So deemed profit can be what? An allowance or a deduction based off a loss or an expenditure or a trading liability. Examples I'll explain. And you will recover the loss or expenditure, or you will get a benefit because of the trading liability. Benefit means cessation or remission. For example, what do you mean by recovery of loss or expenditure? In 2018, I made an entry expense account to cash account, 2 lakh. In 2019, I made some sales return. I made some, that whatever I purchased, expenses, I returned it. I got a refund of 1 lakh. This is a recovery of an expenditure. So how much is taxable in 2019-20? 1 lakh. Next, cessation or remission of a trading liability. In 2020, I made an entry expense account 2 lakh to creditors 2 lakh. Creditors purchase of raw material. So in 2022, 2 years later, that creditor can either waive off that entire 2 lakh. He will tell don't pay only. Or he will say I will reduce the liability. Instead of 2 lakh, just pay 1 lakh. Or he may give you more time. Or he may reduce the interest, whatever the case may be. He may say in the end, pay me just 1.5 lakh, account closed. I had debited 2 lakh. 2 years later, I am paying how much? 1.5 lakh. 50,000 is benefit. That 50,000 also will be taxed under 41(1). Very simple. That is cessation of a trading liability. Next, last part, maintenance of accounts and tax audit. and presumptive taxation. Hardly anything, 10-15 minutes, we'll finish it off. 44AA, tax books of accounts have to be maintained by specified person or specified profession. What is a specified person? Very simple. This fellow, medical, legal, film artist, accountancy, engineering, technical consultancy, company secretary, all these people, interior designer, architecture, all these fellows are the specified persons maintaining specified books. If their gross receipts increase goes beyond 1,50,000 in all the 3 preceding financial years, if their gross receipts exceeds 1,50,000 rupees in all the 3 preceding financial years, previous financial years, they have to maintain books of accounts. This is only for what? Maintenance of books of accounts. This is for specified business. Non-specified business means what? Individual or HUF. Income is more than 2,50,000 rupees or gross receipts or turnover more than 25 lakh rupees in at least 1 out of the 3 preceding previous years. 1 out of the 3 preceding previous years. One out of 3 preceding previous years. Other cases: company, AOP, BOI, firm, LLP. Income more than 1,20,000 rupees or gross receipts or turnover more than 10 lakh rupees. At least 1 out of 3 preceding previous years. These amounts you have to remember. Here it is all 3 previous years. Here it is 1 out of 3 preceding previous years. You have to maintain the accounts. Next comes the tax audit. 44AB. Very simple. If your business turnover is more than 1 crore, tax audit is needed. Or if your profession gross receipts is more than 50 lakh, tax audit is needed. But business 1 crore limit is increased to 10 crore if 2 conditions are satisfied. Cash receipts must be less than or equal to 5% of the total receipts and cash payment must be less than or equal to 5% of the total payments. Then what will happen? The limit is not 1 crore, limit becomes 10 crore. Cash receipt should be less than or equal to 5% of total receipts and cash payment less than or equal to 5% of total cash payments. So example, here Rana, sales 7 crore, purchases 6 crore. Generally, what is the tax audit limit? 1 crore. But that 1 crore is increased to 10 crore if your cash sales is less than 5%, cash purchase is less than 5%. Here he doesn't even have any cash sales or cash purchases. Hence, for Rana, tax audit will not apply because tax audit limit will be increased to 10 crore. Next, Anand. Anand. Total sales is 90 lakhs. Purchases 60 lakhs. Since the total sales only is less than 1 crore, tax audit will not apply. Third, total sales 2.2 crore. Tax audit will apply or not apply. Tax audit will not apply up to 10 crore if your cash sales and cash purchase is less than 5%. Cash purchase 5 lakh divided by 1.3 crore because overall is 1.3. 5 by total 1.3. 5 by 1.3 is 3.85%. But 1 crore divided by 2.2 crore. 1 plus 1.2 is 2.2. Overall is 2.2. 1 crore divided by 2.2 crore is 45.45%. It is more than 5%. Hence, tax audit limit will not be increased to 10 crore. Tax audit limit will be 1 crore. So here tax audit limit is 1 crore. Fourth one, Amit, through other modes 2.25 crore. In cash 5 lakhs. Overall sales 2.3 crore. 5 lakh divided by 2.3 crore is 2.17%. On the other hand, purchases totally 1.7 crore. Cash purchases 50 lakhs. 50 lakhs divided by 1.7 crore is 29.41%. It is more than 5%. Hence, tax audit limit is not 10 crore. It is 1 crore. So, in fourth case also, tax audit is needed. Rahul, tax audit needed. Amit, tax audit needed. Ashka, overall sales only is some 13.75 crore. So, there is no point in calculating cash sales because overall limit has exceeded 10 crore. So, 100% tax audit. Next case. 4.25 lakhs, sorry, 4.25 crores plus 5 lakhs is 4.3 CR. Here it is 4.06 CR. 5 lakh divided by 4.3 CR is 1.16%. 6 lakh divided by 4.06 CR is 1.48%, and hence tax audit limit will now be 10 crore. Is it 10 crore? I mean, have they crossed 10 crore? No. So, will tax audit be needed? No. So, for Babu, no tax audit. Right? Last part. Any doubt? Presumptive taxation. Presumptive taxation is a choice. It is not mandatory. It's a choice. 44 AD is for small businesses. 44 ADA is specified profession. And 44 AE it's for goods carriage. Very, very important because this has been amended by Nirmala Aunty for Finance Act 23. Which means last time ever they can ask you these old figures will be November 23 exam. Right? Minor modifications she has made, what she has made and all I will not discuss. Old one we will discuss, that's all. So 44 AD, small business. Gross receipts or turnover should be less than or equal to 2 crore. That's why it's a small business. So rather than you claiming all expenditure, etc., lawmaker tells take 6% of your income. I mean 6% of your whatever collection as income. Means 94% take it as expenses. I don't care. Deemed. That's why businessmen can thrive in India. Salaried people are bakra fellows. They have to pay so much tax. Business fellows, small businesses, no tax only. What? 96% only is income. On that 30% tax. Peanuts. So if my income is 1 crore, what is my, well, if my collection is 1 crore, what is my income? 6 lakhs. What is my tax? 1.8 lakhs. Consider the same employee earning 1 crore salary. For him, he will die. Right? That is the problem. He can't claim any expense also. Nirmala Aunty gives standard deduction 50,000 rupees for all expenses. That's it. So it really is better if you want to treat yourself as a businessman than salaried employee. But then people still go for salary because job security. Then there is a lot of they will not be thrown out so easily. No risk so much compared to business. It's their own perspective. That's okay. So 6% is what? Income. If you pay via account pay check, if you receive money via account pay check, account pay draft, ECS. If you receive cash and all, then 8%. 8% in what? If it's cash sales, or if the money is received after the due date, or bad debts, for example, bad debts recovery, all that will be taxed at 8%. This is under 44 AD. And if you opt for 44 AD, no maintenance of accounts, no tax audit. Simple. Next, 44 ADA is specified profession. Same profession, medical, legal, accountancy, architect, same thing. Gross receipts must be less than or equal to 50 lakh. This limit has increased. 2 crore limit has increased. So all this will be last time. So how much? 50% will be deemed to be your income. That's all. If you maintain that properly, no accounts and no tax audit. Third one, goods carriage. You should be in the business of owning goods carriages. You should be the owner of goods carriage. Owner will also include leasing. If you have leased out goods carriage also, you can use, no problem. Maximum how many goods carriages? 10 goods carriages. If you have more than 10, 44A you cannot take. Heavy vehicles, gross vehicle weight more than 12 tons, that is 12,000 kg, is called heavy vehicles. Other vehicles is 7,500 rupees per month or part of the month you should take. For heavy vehicles, you should take 1,000 rupees per ton per vehicle per month. So if I have owned it for 8 months and it's a heavy vehicle, 1,000 rupees per ton per vehicle. So if it's 15 tons, 1,000 into 15 into 8 months. Like that I have to calculate. Other vehicles, direct 7,500 per month. So 7,500 into 12. That will be deemed to be my income. I can either choose to do this or I can go the normal way by maintaining accounts. If you opt for presumptive taxation, you will not get any other benefit. No 32, 35, all those things you cannot claim. That is regarding that. Cool. So that completes PGBP. Then you have your partnership form that we'll see later along with other things. Yes, this is your presumptive taxation. Entire PGBP is taken into account. And for partnership form, is one extra point is there in partnership form. Quickly, partnership form, interest and remuneration. Only that part we'll discuss, nothing else. Partnership form, interest and remuneration. First of all, partnership deed should authorize. Next, it should be done after the partnership deed date. And remuneration is only given to working partner. How much is allowed as per 40B? On first 3 lakh rupees, 1,50,000 or 90%, whichever is higher. What is this 3 lakh? It is the book profit. How will you compute book profit? You should take the company law profit plus add back the remuneration given to partners. So on the first 3 lakh rupees, how much you will get? 1,50,000 or 60%, 90%, whichever is higher. On the balance book profit, you will get 60%. So the book profit happened to be 5 lakh. For 3 lakh, you will get 1,50,000 or 90% of 3 lakh, that is 2,70,000. 2,70,000 or 1,50,000, whichever is higher, 2,70,000. Remaining 2 lakh, 60%. 2 lakh into 60%, 1,20,000. So you will get how much? 2,70,000 plus 1,20,000. 3,90,000 is the maximum remuneration to all partners put together. Anything more than that, disallowed. And interest payment is only taken to whom? Only if you have taken in a, what is disallowed here? Interest and remuneration. Under 40B only certain things are allowed, other things are disallowed. If you have taken it as a partner, disallowed. But if you have taken it in any other capacity, then it will be allowed. For example, I am a partner in a firm in my individual capacity. Firm paying interest to me, disallowed. Firm paying remuneration to me, disallowed. For everything, 40B limits I have to apply. On the other hand, firm is paying interest on loan to me. But I am also the karta of a Hindu undivided family. And the Hindu undivided family has given the partnership firm loan. Right? Who has given loan? Partner has not given. HUF has given. I only happen to be the karta of that HUF. So the partnership firm is giving interest on loan. To whom? To me only they are giving. In what capacity? As a karta I am taking, as a karta I am receiving. Will 40B limits apply to such transactions? No. 40B will only apply to those who are partners. In what capacity? In the capacity of partnership. Not in the capacity of any representative. Cool guys, that's all. There ends which one? PGBP. That's it. Tomorrow, salary will do. Capital gains will do. We'll see. Capital gains, salary, TDS. So I want to finish capital gains, salary, TDS, IFOS. At least these 4 if it's over in the next 2 days. They are heavy duty stuff. Because we have only finished PGBP, house property, basic residential status. So capital gains, IFOS, TDS. 3 at least. Which else? Salary. Salary is chiller. So at least if we finish all this, at least to some extent, we would have finished majority of the portion. Other things are a lot chiller. Either agricultural income, all that you can go through. Okay, cool. So tomorrow, let's see what we'll start off with capital gains maybe, or we'll start off with salary, whatever. We'll see, whatever. We will do that. And TDS maybe. TDS is also very important. 3-4 marks will come, but key ones will come. Cool, guys. Thank you so much. See you tomorrow. Bye. Online people, thank you for your patience. You've been there online for so long. Awesome. You guys are super. See you tomorrow. Bye. 12 o'clock, same time. Take care. Bye-bye.